All right, yo, what is up for everyone on the YouTube replay? I hope you're having a great Sunday. The market opens in 3 minutes, and we are in for a lot of volatility this week. If you didn't know, the price of oil has absolutely skyrocketed. It's up 17% just today. So as we know, this is when the Iran conflict happened. Oil was at 63. Well, today it's at 107 right now. And that's going to cause a lot of problems for the economy. As consumers, basically have to pay an added tax. They have to pay more just to get to point A to B. It's not great when oil prices are higher because instead of, buying consumer discretionary stuff that has a real velocity of money affecting the economy, their money is just going to some oil company instead. So it's not great to see the literal price of oil up 18% just today. So when the market opens in 2 minutes, here are a few stocks we're going to specifically watch. ExxonMobil, some of the defense stocks like Raytheon, GE Aerospace, and Chevron. But before we look into that when the market opens in 2 minutes, let me actually go over MCore stock, EME. This is a stock I've actually taken a lot of interest into because they are in an industry I really love. They do MEP work. They do mechanical, electrical work specifically for data centers right now. And check out the valuation. This is why I think this stock you'll find pretty interesting. They're pretty fairly valued. If you look on the right, they're at a 24 forward PE, and I actually think they're going to beat the analyst expectations. So anyway, they're at a 24 forward PE. 41% of the revenue is their mechanical construction revenue. Let me show you the year-over-year comps on this on a quarterly basis. The revenue grew 17% year-over-year, after grew 9%, after grew 35%, after grew 7%. So they are on a streak of growth for their mechanical business. But the main business that's extremely growthy right now is doing this complex electrical construction for data centers right now, which is 30% of the revenue. If we go to their electrical construction business, check out this year-over-year growth rate, or the past 4 quarters in a row specifically. It is up 43%. After grew 23, after grew 7. So the growth rate is literally growing over here on their electrical construction work, which makes total sense. So yeah, that's why I really like MCore stock. 97% of the revenue comes from the US. And check out the net income, the actual profits they make. This is what I find so fascinating. They easily make every quarter like $300 to $400 million. And as we know, there's a lot of tailwinds for electrical and mechanical work. There's actually a shortage of mechanical and electrical workers right now because of data centers and stuff. But yeah, MCore right here is fascinating. They make like $300 million of after-tax net income a quarter. Here's the free cash flow. They're doing also like $300 million of free cash flow a quarter, and they also pay a dividend. Here's what's also very cool. Their dividend that they pay only cost them $11 million a quarter. So there's going to be a significant amount of future room for them to raise their dividend. Yeah, because the yield's kind of low right now, only a 0.2% dividend yield, but look at that payout ratio. Only a 3% payout ratio. That is pretty interesting. Yo, what's up, 6-star and Ben? Good to see you. Oil will be a great short if it keeps going. Totally, man. Yeah, this is what we're about to check. Yeah, the market just opened, so let's go check out what the market's doing. And yeah, look at crude oil right now, or the futures. It is up. Literally, this week has been the most intense week ever for oil. The market can't just stomach this anymore. This is real. The price of oil just like 2 weeks ago was $66 or for the crude oil price. Now it's $107 right now. It nearly doubled in like 2 weeks. So that is certainly not good for the economy. Let's go check out how the market has opened. The S&P 500 futures were negative like 1%. Yeah. So check this out. Again, we're going to wait another 3 minutes so we can actually get a little bit of volume to see how stocks are really moving. But yeah, check this out. S&P is down 1.67%. QQQ is down 1.85%. But this actually gets us a great buying opportunity. I might actually go over SoFi as the first stock because I also just saw someone say that. Looks like SoFi is down 6% right now. This dip that we're getting gives us a great opportunity to buy the dip on great stocks. So yeah, if you guys have any suggestions on stocks that maybe we should buy during this conflict, let me know what you think. And as we'll come back and check out these stocks in a minute here. As we get some more volume, looks like ExxonMobil's up 3, Chevron's up 3. I can't wait to see if that goes up a little more. Raytheon's up a little bit, so we'll come back and check these stocks in a second. But let me go over SoFi really quickly. Oh, and I'll show you how my Webull portfolio is open. Hopefully that doesn't show my password there as I type it in. But let's see. Yeah, so check this out. Already just a bloodbath. Dave's down 7, AMD 3, AppLovin 5, SoFi is down 6. SoFi, I think, is one of the most interesting buy the dip opportunities right now. And let me show you why. I'm not just saying they're a good buy because they're down 5%, because they're on sale. I'm going to recommend it because their fundamentals are phenomenal. And I own this company, so I might be biased, but let me show you what I found so fascinating about SoFi. And yeah, they really are down 4.87% in the overnight market right now. So that means the forward PE is going to be even lower. So look at this forward PE on the right. They're at a 28. Well, it's actually 5% lower than that. So they're actually like a 27 forward PE or something. But this is a forward multiple I can definitely get behind. 28 times next year's net income. That's a fair multiple for a company that grows their revenue at this sort of annual growth rate. If specifically their financial services has been the main growth driver, it's up 78% year over year. After it grew 85, after it grew 115. They are on an absolute streak of growth for their financial services business specifically, and it beats all analyst expectations. This orange line is what the analysts expect every quarter. Notice the past 3 quarters in a row, they beat on revenue every quarter, and not just revenue, but real after-tax net income. They beat like crazy on net income this quarter, and notice the net income expectations are just up and to the right. It's going to be $200 million nearly in 2 quarters from now. So that's what I find so fascinating about SoFi, and they're down 5% in the overnight market. This might be an attractive time to start nibbling on them. Again, SoFi, it's not at the point where like if you wanted SoFi as 5% of your portfolio, you don't make it 5% today, but what you maybe do is you maybe go ahead and make it 1% of your portfolio because SoFi really is quality of enough of stock. And again, it's a smaller position for me. I got 24 shares. I bought this stock like in 2022, so I've been holding them on for a really long time. But yeah, look at the overnight market right now. My portfolio is tanking. If you look at the top, we're already down 2% at the very top there. And I like being fully transparent. Here's our total all-time open profit and loss. We're only up 5.6% all-time. Yeah, sorry. I'm drinking my water here. Here's my main other dividend-only portfolio. Let me check the overnight market. Yeah, S&P's down 1.6, Nvidia's down 2, Robinhood's down 4. Robinhood is another phenomenal stock. I think that's very interesting. So, yeah, and again, here's the price of oil right now, up 18% in the overnight market. Let me see how these defense stocks are moving. So, Chevron's up 3.7, Exxon's up 3.7. Looks like Raytheon's up 2% in the overnight market. Obviously, the defense stocks are going to be green. So Raytheon's a pretty interesting one. What up, Truth Seeker? He says MPLX. That's actually an MLP play. So I do want to give some caution about this stock. This company right here does give you a K1 tax form. So if you buy this stock, every year they're going to send you a K1 tax form. But because they're an MLP, which stands for a master limited partnership, you're technically a partner in the company and not a shareholder. That's why they give you a K1 tax form. And yeah, look at the overnight market at the very top. They're up 4% in the overnight market. So yeah, obviously the oil stocks are going to do really good. They traded only 12 times forward net income. And these are mainly dividend plays. So yeah, if you go to the dividend, you get a 6.7% dividend yield. It's one of the better MLPs. You buy this to really maximize your dividend income. They really do have sustainable and safe 6% dividend yields. Unfortunately, this stock is kind of the same price that it was in 2014, but it's done great if you've held them for the past couple years. I wonder if gold's doing good. Let me check IAU, which is the price of gold. Looks like gold's not that green. Actually, gold's down 1.7%. So gold's actually not doing anything. Actually, I can check out the markets right here. Markets, yeah, look at commodity. Crude oil's up 19, but look at gold right next to it. It's down 1.5. Silver's down 3. Sheesh. Bitcoin's up though. Hey, safe haven. I get Bitcoin's doing better than actual gold right now. That's interesting. Dang, look at this in the top right. This portfolio is down 3%. Comfort Systems is down $800. Yikes, but I am curious to see what Murphy USA will do. This is my only oil and gas play, and I am super curious to see how this will do tomorrow. Here's kind of the thesis behind Murphy USA. This is specifically an oil and gas station play. They own a bunch of gas stations, and right now, or actually the last time oil prices were extremely high, these gas stations said that people would only partially fill up their tank, leading them to come back to the gas station more often than they normally would. And that leads them to actually sell more merchandise and candy bars than they normally would when oil and gas prices are artificially high. And when gas prices are high, they would just make more margin. So it's only a beneficiary to MUSA. That'll be interesting to watch. Yeah, what's up, George? Definitely a bloody open. Yeah, what stocks do you think we should potentially buy the dip on? Someone said Lockheed Martin. Yeah, this is a huge aerospace and defense play, and also a dividend play if you're looking for a little bit of a higher yield than normal. And hey, OLP Papa, good to see you, man. I hope you're having a great day. I do appreciate that gift there. So here's Lockheed Martin. They're at an all-time high. They closed at an all-time high on Friday, and they're in the overnight market already up 2.12%. So let me show you why this one is really quality, and they're not even that expensive. Like, that's why Lockheed Martin could potentially continue to climb higher from here. The forward PE is only a 22. Like, the current PE is a 31, that's expensive, but a forward PE of a 22, I'm a believer that this could easily stretch up to like a 25 forward PE pretty easily. So let's see if there's any news. I bet there's a lot of news. So Lockheed Martin reports record $194 billion backlog. A $200 billion backlog, with the F-35 program representing 26% of sales. U.S. and Israel launched military strikes on Iran targeting nuclear facilities and military infrastructure. So I won't read through all of these. Pentagon requests an additional $12 billion for F-35 fighter jet program. Like, this is insane. And obviously, this is one of the companies that the U.S. can just not allow to go bankrupt. And look how diversified they are between industries. Aeronautics, rotary mission systems, missiles, fire control. Yeah, they sell ammunition like missiles. Like, instead of owning the war, I want to own the people that sell the jets and sell the missiles. So space is 18% of the revenue, and they print net income every quarter. They had a slight one-time adjustment that quarter ago, but yeah, usually they're making, actually, let me just go to the analyst right here, like 1.7 billion in net income every single quarter. Very consistent. The 22 forward PE implies that this one might just continue to climb higher, and you get over 2% of your money back just in a dividend. You buy the stock today, you get over 2% of your money back. That's insane. Lockheed Martin to quadruple munitions production following White House meeting, and defense contractors. Pentagon and defense contractors agreed to triple missile production capacity. Lockheed Martin to expand Peria output. Like, there's just only good news for that company. So yeah, congrats if you're in the aerospace and defense stocks. Yeah, not good for other stocks though. Hey, what's up, Tengrika? Good to see you. Thank you very much for that gift there. I really do appreciate that. Yo, Critical said, what's Murphy's PE and forward PE ratio? It's like a 17 forward PE. And potentially the forward PE is even cheaper with these really high oil prices. Where can I pull this up for you? Yeah, Murphy USA, someone else. Yeah, the current PE is an 18 and the forward PE is a 17 for MUSA. Thoughts on BlackRock? Yeah, BlackRock is one of my favorite private equity stocks to buy on the dip. Like, I see Blackstone dipping, like JP Morgan dipping. I think BlackRock is one of the best stocks to buy on the dip. They are at an incredibly cheap forward PE, and their main business is showing a little bit of weakness right now. Like, BlackRock is actually limiting withdrawals from their private equity fund. I'll actually see if I can pull up this news right here. This is what's kind of been hurting the stock. Yeah, look at this. BlackRock restricts redemptions, aka they restrict withdrawals from their $26 billion corporate fund after hitting quarterly caps. Some fund wanted to withdraw 10% of the entire assets from the fund, and they're just like, we're halting withdrawals, and it's just a terrible sign. So that's why they fell 7% on Friday. Blackstone fell 4%. A lot of financial names fell. It's just over fear around this whole industry right now. But I really think BlackRock is one of the better buys because of all their other businesses. If you didn't know, BlackRock also manages assets. Like right here, this is one business I'm extremely bullish on. This is their alternatives revenue. Look at the jump from full year 2024 to 2025 revenue. It's grew 72% year over year. What caused that major growth out of nowhere? That's when they released the IBIT ETF, their Bitcoin ETF, and their Ethereum ETF. And this is now creating them like massive year over year growth rates. Like last quarter was up 120, and it's up 35% this quarter after grew 45. And that's just one of their business. Like their next largest business is their technology subscription revenue. This is reoccurring with subscription revenue. It grew 25% year over year to a new record. It's never been 530 million before. But yeah, it's this main private equity business that's showing a little bit of struggles right now. But anyway, I think they're one of the better buys because on the right, the forward PE is a 17. You get a good dividend. So if you buy the stock today, you're getting 2.2% of your money back just in a dividend every year. What stock app is this? Yeah, hey, it's this is a brokerage I'm on. It's the very first link in the link tree in my bio there. If you want to get this brokerage I'm on, it's my favorite app. Broker called Moomoo. It's an affiliate link, full disclosure. OLB Papa said, I'm all in on Costco. I bet you this stock will do pretty good in this environment, as like Costco is known as like a defensive staple. Like in a recession, like in the 2008 recession, Walmart was like the second best performing stock. And I think, like, look at this annual stock performance on Costco. It's very consistent. I love the business model. I love going to a Costco. You know, you have to have a subscription just to get into Costco. And whether or not you go to the Costco store every month, they're collecting that subscription revenue from you. And if we go to their net income right here, they print money easily, like $2 billion of after-tax net income a quarter. And they pay a dividend, so you get 0.5% dividend yield, a safe 27% payout ratio. They raise their dividend every year. Sometimes they do special dividends. The only problem with Costco is the forward multiple. They're so high quality that they definitely deserve a very high multiple, but this high of a multiple, it's just hard to like buy it significantly today at current valuations. Back down here, it looked pretty attractive at like sub 900 or sub 850, but close to $1,000 a share. It's definitely tough at 47 times next year's net income for the growth that it has. But yeah, Costco, I actually wish I owned them. They're such a great business model. Same with Walmart. Walmart and Costco have been doing phenomenal. Let's actually go check how the market's doing super quickly. Maybe we shouldn't check the futures, but dang, yeah, the S&P's down 1.62. Well, here's my portfolio. We are down 1.6 right now. Dang, CEG's down 3. Google's down 2.5. How's the Roth IRA doing though? All right, dang, Webull, NO Data's down 5. That is, oh, it's going global. Hey, that's interesting. What's up, Luigi? What's up, y'all? What's up, Tommy, George, Photonics, AAOI? Hey, what's the ticker symbol for that one again? For Photonics. I want to buy Lockheed Martin back. That one was a good one. We are in bad times. Oil 108 per barrel going to 120. Yeah, check this out on the left here. Or actually, that's not. Yeah. Oil prices are up 18% just today. This is really bad for the economy. Yo, good to see you, Larry. I hope you're having a great day. All right, how do you like Moog? Yo, I'm loving Moog stock. They're one of my favorite aerospace and defense stocks right now, and I just bought them. So let's check out HIMS right now. There was a lot of news around HIMS last week, or right as the market closed on Friday. Oh, wow, they're up another 20%. I wonder if I can pull up like the... Oh, that's not going to work. I should pull it up on Webull to get the better view. But actually, there's a lot of news to talk about HIMS right here. So this is like a healthcare website right here where they sell a bunch of different prescriptions. So yeah, here's how the stock is moving, I guess. I guess that's where the stock's at right now. Anyway, they're up crazy because... there's a lot of news I need to get to. This company used to sell Ozempic on their website. You know, they used to sell Novo Nordisk's, Ozempic, and Zepbound on their website. Then Novo Nordisk abruptly ended their partnership, and the stock fell. And then Hims and Hers is like, all right, we need to out-innovate. So they decided to create a knockoff weight loss prescription. And then Novo Nordisk sued the life out of this company, reported them to the SEC and FDA, and now and they tanked like crazy on the news. But now, if we look at the news tab right now, they're actually ending all their legal disputes. Check this out: Novo Nordisk and Hims and Hers to end legal dispute, and they form a partnership on obesity prescriptions. So that's what I find fascinating. I'm pretty sure it's just because Novo Nordisk stock is also kind of in the toilet right now, like 80% off its all-time high. So yeah, this is the company that owns Ozempic and Wegovy. They kind of lose their exclusivity for Ozempic in about 2 years. So it's tough for them. I don't know. Novo Nordisk invests $432 million. Oh yeah, they're a European company. But that was just great news. That's why Hims and Hers is up so much, because they ended that huge legal issue. So they're going back into a partnership again. It's been such crazy. Should we buy oil now, or is it too high? Yeah, the risk reward of buying oil now is definitely rough. Yeah, I don't think I'd really buy oil today. Let me actually go check again, Webull. Let's see what's moving right now. So yeah, ExxonMobil is up 3.5. CVX is up 3.3. Dang, Raytheon is up 5% in the overnight market. Shopify's down 4. Shopify was one of the stocks we were looking at yesterday. And Robinhood too. These are all great stocks I think are good to buy the dip on. MCOR's down 2.4%. Hey, what's up, Nick? I appreciate you. Yes, sir. We are back at it. EOG is my only energy play. Yeah, EOG is a great oil driller. One of my favorite oil and gas plays as well. So Johnny said AMPX stock. Yeah, so this is one of those smaller cap battery companies. So you just want to be careful with them or with this company just because and they're at all-time highs right now. So the risk reward of buying it at all-time highs doesn't seem great, but I can understand why this company is at all-time highs. So yeah, if you look in the top right, the company is worth 2.2 billion. So they're still not huge. But here's why the stock, I think the stock is doing really good, not just from momentum, but because the fundamentals have really impressed investors. If we look at the revenue right here, this is what you want to see. A year ago it was a tough buy, just doing 3-4 million in revenue a quarter. But now the revenue is hitting a new record every quarter. They did 21 million just this quarter. And if you look at the analyst projections, it's expected to only climb higher. It's going to 25 mil next quarter and then 27 mil. And historically, they always beat on revenue by a good chunk. So, and I don't think they lose too much net income. Yeah, look at how they've narrowed their net income losses. It looks like they only lost 3.8 million this quarter when they used to lose 10 million the same time last year. So as the revenues growing like crazy, they're narrowing their losses. And maybe by the same time next year, they're actually going to be net income positive. So that's why I totally understand why this stock has done so great. But in the overnight market, they are down 7% right now. But what isn't down like crazy in the overnight market right now? Dang, here's my portfolio. We are down bad. Comfort Systems is down 400. Powell's down 400. Hit the like button. Yikes. Yeah, looks like Iran was the straw that broke the camel's back for oil. All right, let's see here. What stock next? Thoughts on COHR and PWR? Wait, what's PWR again? Quanta Services. I think this is a like an electrical infrastructure play. Look at how glorious this stock chart is. I mean, this was the 2020 price. It was $40. Now it's 540. That is like a 20x just since 2019. Let's go see what caused that. So yeah, this is an electrical infrastructure company that's 80% of their revenue. And check out the past couple quarters, how they're just beating on expectations. No wonder they're doing so well. The orange line's what the analysts expect. They expected 7.3. They did 7.8. That's really good. Let's go to their net income right here. Yeah, they're easily making a couple $100 million of real after-tax net income. And if we zoom out, that's like a record net income. A record year of net income. Like, this is incredible. Do they pay a dividend? Yeah, you get a really small dividend, but a really low payout ratio. They're probably doing share buybacks, but they're a little expensive at a 60 forward PE. Dang, but this is one of like the best performance stocks out there. I can't believe how good it's done just since 2020. Dang. Congrats if you own this stock. $80 billion market cap. That's crazy. COHR, what is this one? Is that coherent? United Health, Novo Nordisk, Palo Alto. Yeah, hey, Palo Alto, that's a good cybersecurity stock. I wonder how the cybersecurity stocks are doing. This is the company that just got added into the S&P 500, and NVIDIA also just bought them. I kid you not. So let me actually pull that up. Yeah, NVIDIA literally buys $2 billion in coherent. So literally just buys $2 billion of coherent stock. Basically to secure their supply chain logistics. They want to have their like fiber optic solutions. And also on Friday, they literally joined the S&P 500. So that's huge news. When you join the S&P 500, like so many other funds, like passively buy your stock as well. So let's go look at their fundamentals and see why they're doing so well. Yeah, so obviously this is a huge sector right now, data center communications. Yeah, these future expectations are phenomenal. Revenue is going to go from 1.5 to 1.9 billion. That's a great year-over-year comp. Net income's going from 38 mil to 197 mil. Actually, it's better visualized on the EBITDA there. It's almost supposed to double the earnings. So no wonder this stock has seen so much stock price appreciation recently. It's pricing in that future growth. I mean, there's just so many tailwinds from the data center sector. NVIDIA's buying the stock. Like, I guess you're a good company if NVIDIA's buying if NVIDIA, the company, is buying your stock to secure their supply chain. So very interesting company here. We can actually see every stock that NVIDIA owns down here. They own like Intel, CoreWeave, Synopsys, Nebius, some of those kind of names. Oh yeah, Palo Alto Networks. This is a very interesting cybersecurity stock, and I'm really bullish on cybersecurity specifically because as AI gets better, hackers will like utilize AI and like just be able to hack better. So I'm just a believer that the demand for cybersecurity is only going up from here. And especially with this conflict that's happening right now, Palo Alto Network Unit 42 warns of escalating Iran-affiliated cyber attacks amid conflict. So this is definitely a time where you want to have a good cybersecurity system. And Palo Alto Network is the second like best one or like the best one out there. Over the half of the S&P 500 use their company. This is a subscription model business, or 55% of the revenue is. And this is what you want to see if you're just going to diamond hand a stock. That subscription revenue literally just hit a new record every year, every quarter. Analysts love subscription revenue because it's all reoccurring, really predictable, and it just grows double digits every quarter. So very impressive numbers there. They print net income too, so this is an extremely profitable company. The net income grew 61% year over year. They're making like 300 to 400 mil in net income a quarter. The free cash flow is really good. Wells Fargo initiates coverage with an overweight rating, sets $200 price target. It's $165 today. So if you're looking for a really high quality cybersecurity company with a good subscription model, check out PANW. Nancy Pelosi also owns this stock. So there you go. Marvel is a good buy to this dip after great earnings. Well, let's check out Marvel. This is a semiconductor company. Let's check out Marvel right here. Yeah, they reported earnings a couple of days ago, and they were really good. Or on Friday, I mean. Look at that. The stock, that's why they gapped up, because they reported earnings. Let me show you what the actual earnings were. I wonder if they'll do a recap for us. So data center segment led performance, generating $1.65 billion or 75% of total revenue. Recent acquisitions of Celestial AI and XCon are expecting to strengthen AI scale-up networking capabilities. Management projects Q1 revenue of $2.4 billion and raised their full-year outlook to nearly $11 billion, with long-term data center revenue target of $15 billion. So that's incredible. Let's go. Oh, yeah. All right, let me pull up this quarter specifically. So here was Q4. The net income was what beat like crazy. They expected $294 million net income. They did $394 million. It's hard to see, but they really did beat by $100 million on net income, beat by a good chunk on EPS. And look at the future projections. The EBIT's going from 680 or 698 to 940 year over year. So, and the revenue too. Revenue is going to go from exactly $2 billion to $2.58 billion year over year. So there really is a lot of future growth still expected for this company. They gave good guidance. They rose it, and that's why the stock is up. I guess 75% of the revenue is their data center revenue. Kind of like AMD. Yo, what's up, Dwight? Good to see you. Hey, Nathan, when you get a chance, could you do NEO? I missed it last time. Well, I can do NEO. Yes, sir. Actually, let me give a quick look at oil prices real quick just to get a better idea here. So actually, this isn't too bad. ExxonMobil's up 2.8. Raytheon is up 3%. But yeah, a lot of the tech names are down bad. I'm actually looking to buy Reddit. Reddit is probably going to be on my buy list this week. So here's NEO. This is nothing's too. NEO weekly orders reached 3,500 units in early March, highest level in 2026, following new promotional measures. The only bad part about NEO is it's just first off, they sell a commodity. They sell cars. Second off, they're a Chinese ADR, so they're a Chinese company selling Chinese cars. So they don't even sell these cars in the US, or they can't because we tariff them. But it's just a low margin industry. And I think I'd rather own BYD. Here's some of the like vehicle delivery data right here. But here's the bad part. And these are, and first off, this is in US dollars. They're a Chinese ADR, so we've converted the currency from Chinese currency to USD, and they really do lose a lot of money. This quarter, they lost $488 million. Last quarter, they lost $700 million. The quarter before, $900 million. The quarter before, $900 million. And that's really devastating when your whole company is worth $10 billion. When you lose over, actually close to over $3 billion in net income. That's like 25% of your market cap you lose a year. And they kind of just do this for all of eternity. Again, it's the net end game here is super low single digits. Tesla is super lucky to get a 3% net margin. Ford is lucky to get a 3% net margin. So I just don't love the long-term thesis around just electric vehicle commodity. And there's a huge pricing war. BYD is the real winner. That's the if I was going to buy a Chinese car company, Chinese manufacturing play, definitely BYD. And they're also on a dip right now. But yeah, they're one of the better ones. I just don't love that whole industry. So Vulcan said Iris Energy short play sell. Well, this is a mainly a Bitcoin mining company, but a lot of the reason people like this stock is because there's a huge tailwind from renting out the capacity of their GPUs to data centers. So here, I'll just show you this breakdown right here. So this company right now for 2026 Q2, the most recent quarter, 90% of all the revenue literally just came from their Bitcoin mining revenue. So mostly a Bitcoin mining company, but then they're starting to grow this cloud service revenue where instead of using the GPUs to mine Bitcoin, they're using it they're renting it out to other people for cloud service revenue. So that's why the revenue has been really growthy, but it's not they're not expected to lose that much money. So here's any news. They buy $3.5 billion of GPUs. Yeah, again, short seller questions, Iris Energy revenue guidance, transparency. Basically, I just don't love the super long out-term look because all this company does is literally they just own GPUs in a data center. Nothing proprietary, literally just owns a bunch of GPUs. What is the best oil stock? The best oil stock would just be like a boring Exxon Mobil. They're up 2.7% right now. You get a nice dividend yield. I own Murphy USA. This is an oil and gas station play. And the thesis here was actually last time oil and gas prices were really high, they said that people would actually only partially fill up their tank. Instead of fully filling it up, they'd only partially fill it up, leading them to come back to the gas station more often than they normally would. And so they would sell more candy bars and merchandise. So that's my oil and gas pay. I got Murphy USA, only up 20%, nothing crazy, but it's nice to own a little bit of oil. I don't expect, buying oil today at current prices is definitely hard because I don't see the risk reward. Like, it's a commodity oil, and like even China, like every country wants the price of it down right now. So anyway, someone said Verizon stock. This is a great stock, or if you just want to maximize your dividend income. You do not buy this stock if you want to outperform the S&P, because historically, here's the bad news on Verizon. If you didn't know, Verizon stock is literally the same price that they were in 1999. So the stock's been flat since 1999, but what you do get is a really nice dividend, a very safe over 4% dividend yield. And it's not just Verizon that's done really bad, and I'm not just picking on Verizon, it's literally just the entire industry. If you go to AT&T stock, which is their biggest competitor, AT&T is also the exact same prices they were back in 1997. So these you kind of just buy to maximize your income. You don't expect to outperform the S&P 500 with those. You're lucky to get a couple 1 or 2% stock price appreciation on average a year. But if you bought them a month ago, you must be doing great. All right. What's next here? What do you think about TEPT? I got in at $1.90. Well, hopefully this isn't. I typed in TEPT. Yeah, I can't find that stock, unfortunately. Can you please go over Rich Tech Robotics? Yeah, I hate to say this. I was even just talking to someone about this. This is one of the worst. Like if you're genuinely looking for a good robotic stock to buy and hold forever, this one is quite possibly one of the worst, if not the worst, like actual robotics name. They have no IP, no patents, no revenue. They're getting sued right now for false marketing a partnership with Microsoft. I want to see if I can find that, but yeah, anyway, if you're looking for a real robotics company, don't buy this one. Like, look at the revenue. Like, you're literally buying a company that does $1 million of revenue a quarter, and and the revenue fell 9% year over year. Anyway, I just don't have anything good to say about this one. It's a micro cap. You want to buy the robotics companies that already have, like this one right here, Symbiotic. They have the money and the talent to take over the industry. Symbiotic already has over 1,500 registered IP and patents, and they do something called warehouse robotics. This is an industry I'm specifically bullish on because this is already like today real world cases for robotics, and their largest customer is literally Walmart. I think you'll find this pretty cool right here. Yeah, they help out a bunch of logistics for warehouses for all these companies. So there was a picture of the robot. I kind of want to show you what it looks like right here, but basically It just does these tasks where it can find an item, take it out, and move it from one place to another. It's really fascinating. So yeah, this is one of the better companies. Again, we just saw Rich Tech Robotics with literally $1 million of revenue a quarter. Well, here's this company with real revenue. They did 630 million of revenue, up 30%. After grew 35, after grew 75. So they're on an absolute streak of growth. They made net income this quarter. So, oh, and let me show you the shareholders down here. Yeah, Walmart loves them so much because they're the largest customer. Walmart literally decided to buy the stock. Walmart owns 12% of all the shares that exist. So pretty cool here. That's an alternative one. And also, if you like Rich Tech Robotics because they're on a dip and they're like technically oversold, this is another one that might be technically oversold and a much more high quality buy, in my opinion. Okay, Starbucks stock. What stocks are good for swing trading? I don't know. That's a good question there. Ooh, hey, what's up? Christopher, Norm. Yeah, no problem. What's up, Hudson? I've been holding up ET. Yeah, we'll look at Energy Transfer. That's an MLP, actually. But here's Starbucks right here. This one has been a little disappointing. Like, they're the same prices they were as in 2019, so the stock has been flat for like 7 years. But and it's not just a Starbucks problem. Actually, they've been one of, even though this is the same prices they were 5 years ago, they're one of the better performing restaurants because, like, look at Wendy's. Wendy's is lower when they IPO'd in 1997. So if you bought the 1997 IPO of Wendy's, you're down on your money. Same with like Jack in the Box. It's pretty depressing. A lot of these like restaurants are just going out of business. Jack in the Box, same prices they were in 1998. Cracker Barrel, lower than they were in 1998. Red Robin, bankrupt. Like, there's so many examples of this. But Starbucks, it's still a tough buy because they're not cheap. If we go to the forward PE, I mean, they're at a 40 forward PE. That's not, exactly a steal of a deal. And they're also seeing a huge margin compression issue because if you didn't know, the price of coffee and chocolate are both extremely elevated right now. So if we go to their margins, this is the huge issue on Starbucks. Plus the weak consumer of restaurants. Their gross margins are down 14% after they fell 10%. So like you can just see the year-over-year decline on the gross margins, and say with net margins are down 65%. After they fell 23%. So they used to have a respectable net margin every quarter. Look at this. They used to have 10, 13% net margin every quarter. This is the bad news. This is why Starbucks in a lot of water. They have like super low net margins now, and they're seeing a huge margin collapse. So to the point where like the revenue's growing. Look, revenue's up 5.5, but the net income is down by 62. And that's not some, well, actually, this is a better way to look at it. The revenue's up 5.5 and the profits are down by 15. It didn't fall that dramatically, but it did still fall 15%, which is a huge gross margin decline. Anyway, I'd be very careful with Starbucks. At a forward PE, it's not exactly cheap. I like the whole business model of McDonald's more. And personally, if I'm going to spend money at a place, I'd rather get like some food than a drink. But a lot of people are locked into Starbucks and just go there daily. But yeah, that's a pure like consumer discretionary play. It is an interesting one. It has a nice dividend too. Oh, I forgot to mention a super bad part about Starbucks is their dividend payout ratio. So I shouldn't even go over it. I've already been so bearish on them. I don't want to like be more bearish, but here's another bad thing about Starbucks. They pay a dividend no matter what every quarter. They have to pay a dividend that costs $705 million a quarter. So no matter what, they have to pay $700 million a quarter of net income out in dividends. And for the past 4 quarters, they have not made $700 million in net income a single quarter. So they actually cannot afford the dividend any of the past 4 quarters. So they're actually having to basically take out debt, and they're leveraging up their balance sheet to be able to pay the dividend. It's a rough time for Starbucks. Ooh, let's see what's next here. Ooh, Neo battery swap. That could be interesting. Oh yeah, so Energy Transfer. This is an MLP. I do want to warn you, this isn't a stock. Or if you buy this stock, you're technically not a shareholder. You're a partner in the company. And because you're a partner, they send you a K-1 tax form. And those are notoriously hard to fill out. My first year investing, I didn't know what it was. It cost me a couple hundred bucks with an accountant to fill it out. So if you don't know what a K-1 tax form is, just don't even bother with this because they're so complicated. But because they're an MLP, they have a huge dividend. This is an oil and gas pipeline stock. Like 90% of their assets are pipelines, and they have an over 7% dividend yield. So you get 7% of your money back no matter what, just in a dividend. And then, hopefully a couple percent stock price appreciation. It's kind of the same price. It's slightly above where it was in 2018, which is good. And they're up 2.7% in the overnight market. So that's good. Yeah, the MLPs are doing good. The forward PE is only a 12 because it's a commodity stock. But yeah, 12 forward PE. Yeah, crude oil, transportation. Oh, this is another really cool one because this is super bullish. They have an investment in Sunco. I love Sunco. And this is ticker symbol Sun. This is another MLP. Oh my goodness, dude. They're also up crazy overnight market. This has been one of the better performing MLPs to ever just. Anyway, Energy Transfers is one of the best MLPs if I had to buy one. I just don't because of the tax complications. Ooh, SEHD. This is a dividend ETF. So if you're focused on dividends and getting a higher yield, this is an interesting ETF because it owns a lot of the higher yielding type stocks. They look at the dividend yield. You get a 3.37% dividend yield. So no matter what the stock does, you're getting basically 3.4% of your money back just in a qualified dividend. And then historically, you should get 3% stock price appreciation as well for maybe around a 7% total return a year. But check this out. It owns a lot of the higher yielding names. And it's good that their largest holding is Lockheed Martin because I bet this is about to rocket up. Yeah, it's already up 2% in the overnight market, but yeah. And ConocoPhillips, this is an oil and gas stock. I bet, look at that. They're up 5% already in the overnight market, ConocoPhillips. So yeah, Lockheed Martin, ConocoPhillips, Verizon, Chevron, Altria, Coca-Cola, Pepsi, these kind of higher yielding names is what they own. Ooh, let's see. T-Mobile stock is the real winner. Yeah, that's my favorite, telecom stock. I think they even have a little partnership with SpaceX. They don't suffocate themselves with a high dividend payout ratio, so they actually do massive share buybacks. So they buy back 4% of the stock a year. T-Mobile receives FCC license to test 6G prototype equipment. I remember when 5G first came out. Now they got 6G. So anyway. Let's see. This T-Mobile prints money and the forward PE is pretty attractive. Well, it's a 21 forward PE, so they trade at 21 times next year's net income. They make easily 2 to 3 billion of after-tax net income a quarter. And what are they doing with 2 to 3 billion net income a quarter? Well, they pay a dividend that only costs 1.14 billion, but the real winner is the share buybacks. Yeah, look at that. They're doing 2.5 to sometimes 4 billion of buybacks a quarter. So that's why T-Mobile stock has been a much better performer than a AT&T and Verizon because they just do so many share buybacks and have a lower dividend. Makes them more able to invest in the future. Hey, what's up, Steve? Why don't you buy commodity stocks? I have a few commodity stocks. Let's actually see how they're doing right now. I own a chicken commodity stock. Let's see if they're up. Do I have any stock that's up? It's the only stock that's up. Well, besides Power Solutions, my commodity stock, Maine. They literally have a 40, actually a higher, I think a 50% chicken egg market share in the US. All this company does is sell chicken eggs. And they have a really high dividend yield, an 8.85% dividend yield, 11 forward PE. So this is one of my commodity stocks. We bought them. Hey, we're actually doing pretty decent. How much are we all time up? We're up 12% all time on them, not including the dividends. And we've gotten a lot of dividends from them. My other commodity stock is Murphy USA. What was this right here? Yeah, look at crude. Or oil is up 19% right now, so watch out for that. And I wanted to check also if Lockheed Martin's up. So yeah, or Raytheon is up 4.2, Exxon's up 3, Chevron's up 4. Yikes. The growth of Starbucks is gone. That's why Ryan left. Yeah, Starbucks, it's a tough story. Dang, RIP my Comfort Systems position. How much are they down right now? Because I'm already down $1,000. All right. What do you think of Coca-Cola? Is this pre-recording yet? No, this is not a pre-recording. Hold on to that one more. Well, hold on, say that one more time. What tax form for ET? Oh yeah, hey Hudson, look up a K1 tax form. So Energy Transfer, they pay you a K1 tax form. So I would look up that. Kratos stock? Yeah, let's do Kratos. This is a drone play. Then we'll do Coca-Cola stock. Yeah. Hey, sorry, Nate. Yeah, I'm reading both chats here. I'm reading both the YouTube and the TikTok chat. What's up, y'all? Yeah, we'll do Coca-Cola after this. I actually own Coca-Cola, the bottler, Coca-Cola Consolidated. So here's Kratos Defense. This is a huge government contract company, and they were able to just successfully raise prices of their government software. And they had a big beat the past couple of quarters. Like, look at this. The orange line every quarter is what the analysts expect them to report. And notice the past 3 quarters in a row, they beat like crazy on revenue. And look at what it's expected to do in 2 quarters. Revenue is supposed to go from 350 to 405. And the net income's going to go to 11 million. So that's the cool thing. Like, they're already a net income positive company. They're actively making net income every quarter with good top line growth. Like, if you zoom out to the revenue, like, this is what you want to see genuinely. Good double-digit top-line growth. Let's see if there's any. Only bad news is they're pretty redonkulously expensive at a 280 forward PE. Like, it's almost like impossible to buy them now. We don't get any. Okay, so there's no news around the company, but yeah, this is a government contract stock. Yeah, so look at this. They're Kratos Government Solutions. This business on a quarterly basis, it's up 25%. And then this is their drone business, I believe. Their unmanned systems, which are drones. Hey, it's up 12% year over year. Not too bad. So yeah, there's Kratos. They're just really expensive, but definitely one of the more higher quality names. I got one from them last year. K1 Tax Form is legit. Hey, what's up, Luffy? Verizon's been doing pretty good. Yeah, hey, Verizon has. So Coca-Cola stock, this is a great defense name. Here's how I see Coca-Cola stock. If you buy this company, you're not going to outperform, the tech-heavy S&P 500, but you should get around 6% or more of your money back every year. Here's how I do that math. So first off, Coca-Cola, the yield's actually a little higher. It's like a 2.85, but you basically get 3% of your money back in a dividend every year. And then I think on top of that, as you can see from the stock, you should get around 3% in stock price appreciation as well. For a 6% total return a year, the valuation isn't nuts, only a 24 forward PE. The forward PE is lower than its current PE, so they're expected to grow their EPS and net income. Great news. Yeah, look how consistent this bottom line is. Like, they're easily making 2.5 to 3.5 billion of net income a quarter. They own so many brands. And I actually own the Coca-Cola bottler just because I thought it was going to be a little bit more growthy. This is ticker symbol COKE, Coca-Cola Consolidated. Like, let me try and list a bunch of the Coca-Cola brands. Like, they own Sprite, Monster, Fairlife Milk, Minute Maid, Simply. Let me see if I can find, they used to have a picture of all the brands here. Yeah, here's all the brands. It's kind of going to be hard to see. Yeah, Body Armor, Mr. Pibb, Gold Peak, Vitamin Water, Minute Maid, Smart Water, Dasani, Topo Chico, Powerade, Fanta, Fresca, like all these great brands. So Topo Chico, I love. So yeah, Coca-Cola is a beverage monster, and it's like the most competitive industry ever, but they dominate it. What app is this, and is it free? Yeah, hey, this is a free app. No, this is not Bloomberg. This is a broker called Moomoo. Or if you want to get this brokerage I'm on, it's an app where you buy stocks on. It's the very first link in the link tree in my bio. Okay, what's next? Let's see. Palantir. Yeah, Palantir, they are seen as a beneficiary of this conflict. Let's see if we can pull up any news down here. So look at this. Palantir benefits from U.S.-Iran conflict as defense AI demand increases, and they just secures a $1 billion DHS contract. Pretty insane. Okay, well, anyway, let me show you why I love Palantir. Their fundamentals are incredible. So 54% of the revenue literally just comes from the government. Like so many police stations, the Army, Navy, Air Force, they all use Palantir. And if we look at the growth rates, this is the most incredible part. Palantir's government revenue is up 60% year over year. After grew 41, after grew 16. So if you notice, the growth rate is literally growing on their government revenue. And at this growth rate, like what's it going to be the same time next year? So that grew 60% year over year. Even more impressive is their commercial side, which they just got a bunch of contracts like Google, GE Aerospace. This grew 82%. After grew 31, after grew 30. So this is another huge growth driver for them. And they're just beating every expectation. Like they expected them to do 460 million net income. They did 609 million net income. And the free cash flow is incredible as well. Record free cash flow, record net income. And another huge cherry on top is they're a debt-free company. They don't owe anyone any money. They have like $7 billion of cash on hand. So yeah, every time they make net income, They don't have debt to pay. They don't pay dividends. They sometimes do share buybacks. So they really just retain all the money they make. That's why their cash pile grows every quarter. I have nothing bad to say about Palantir except they're expensive. I'd love to own Palantir if they weren't so expensive. But yeah, congrats if you own them, Henry. You must be up like crazy on that stock. Let me go check. Oh, hey, what's up, Tangriga? Thoughts on Dell? Thank you. Yeah, let's do Dell. This is a infrastructure server play, and they just got a huge deal with someone. I forget who it was. Dell reports record 2026 results with AI server revenue surging 340%. Raises dividend by 20% and authorizes $10 billion share buyback program. So $10 billion buyback is huge because if you notice in the top right, the whole company is worth $97 billion. So buying back $10 billion of your stock is over 10% of the entire company. And Dell is really a value play. I do like them more than Supermicro because here's why I see them as a value play. They're like dog cheap. Again, they kind of just do a commodity, the server GPU installations, but a 13 forward PE. So they only trade at 13 times next year's net income. So they're kind of diversifying away. So yeah, if we go specifically to their infrastructure solutions, this is what's been growing the most. It's up 24% year over year. After grew 33, last quarter grew 44. So that's been growing very nicely. They beat on expectations. Check that out. Analysts expected 31. They did 33.3. Analysts expected $2 billion in net income. They did $2.2 billion. That's how they can afford to do a $10 billion buyback because they're doing like $1.5 to $2 billion in net income a quarter. So they made $2.2 billion of net income this quarter. Let's see how much the dividend cost. It only cost $346 million. And if you're wondering, how is the cost of the dividend going down? It was $396 million. Why does it only cost $346 million now? Did they cut their dividend? No, they bought back their own shares. And when a company buys back their own stock, they don't have to pay dividends to those shares anymore. So it makes the dividend cost less, give you more ownership in the company, makes the EPS grow faster than it would have. Like, check this out. The net income grew 47. So that means the EPS should be up 47. But no, since they bought back so much of their own stock, 9% of it, the EPS grew by 56% year over year. I mean, you can't make it up. So 1.5% yield. So actually, I really like Dell, and I can see why this one's pretty close to all-time highs right now. Very shareholder friendly with their dividends and share buybacks. So, someone said Main Street Capital. So that's actually a BDC. A lot of the BDCs are getting crushed right now. But another really unique thing about this stock is the fact that they pay monthly dividends. So this company has a really high dividend yield, but it's actually sustainable because there's something called a BDC where literally by law, they have to pay out 90% of their taxable income in the form of a dividend. So if you look at the very middle of my screen, they have a 5.5% dividend, and it is sustainable simply because they're a BDC. But again, at the same time, because they're a BDC, when you receive these dividends, they're not taxed at long-term capital gains, they're taxed at short-term capital gains, which means you have to pay higher tax on this dividend, but that's okay. They can't afford the dividend. I'll just show you the math for yourself. So look, this quarter, they made $131 million in net income. So they made $131 million net income. So let's go see how much the dividend cost exactly every quarter. It's in the cash flow statement. The dividend cost every quarter on the very left, $85 million. And they easily make over $85 million a quarter. So that's how they're even sometimes doing special dividends. So they pay you 26 cents a month. If you look 4 months ago, they paid you 30 cents. That's because they had so much leftover money. They had to pay out that special dividend to not get taxed on it. Or they have to pay high tax on it. So they just returned it all to shareholders. Anywho, this is one of probably my favorite BDC out there that exists. Another one that's getting crushed right now is Blue Owl Capital. Look at them right now. Zoinks. But yeah, Main Street Capital is one of those you buy to maximize your dividend income with that monthly yield. Chevron, please. Yeah, you know who also owns Chevron? You know who's probably really happy right now? It's the homie Warren Buffett. So here's Warren Buffett's portfolio. He owns a lot of the dividend type names like an American Express, so Coca-Cola, Bank of America. But 7.9% of his portfolio is in Chevron. And that's been the right move because with all this Iran conflict, has anyone seen oil prices? It's up 19% just today. Chevron completes Hess acquisition. Yeah, they bought a company called Hess Midstream, or Hess Midstream is still listed. But anyway, Chevron, their profits are about to go up. So if we can look at their forward PE, I bet you this forward PE is a lot cheaper because analysts haven't updated their future earnings based off the current price of oil and how that's going to happen. But anyway, would I buy Chevron right now at all-time highs? No. They're also up another 3.5% right now overnight market. It's just the risk reward to buying them is tough, but it's always nice to have oil as a very small portion of your portfolio. Like buying oil in the long run, you're not going to outperform the tech-heavy S&P, but you buy it for moments like this, where, that war fear, a safe haven asset like oil right now is desirable. And it pays good dividends. So while it lags and does terrible, you get a good dividend, qualified dividend in the meantime. But it's unfortunate because it's kind of like, it's tough buying oil after it's already done so well. But yeah, I'll show you the, let me zoom out here. So look at this. Exxon's up 3.3. Raytheon is up 4.4. Chevron's up 3.3. So interesting. Next week's going to be really interesting. All right. Oh, Zero, what's up, man? Hope you're having a great Sunday. AV stock. I actually like this company. They're on my watch list. And Norbero. Shout out to member Norbero. Hope you're having a great day. Yeah, we'll do MicroStrategy. What's up, Rob? Lawston. And Zach, he said PRME. Yeah, my bad. I'll definitely want to get to that one and remind me to get to VRT. Sorry if I miss out on some stocks here. So here's AeroVironment. I mean, they're up in the overnight market. When do they report earnings? They report earnings on March 10th. So literally in 2 days, they report earnings. So if you buy the stock now, it's almost like a bet into earnings. But they have been, let's see how they've been doing. Well, actually, they have great future expectations. Check this out. Revenue is going to go from 275 to 575. So autonomous systems. Oh, so maybe they're like a LiDAR or maybe like an ONDS competitor. Space, cyber, and directed energy. Hold on. Let me go look at their website. Okay, so they're categorized as an aerospace and defense company. Here's their website right here. Why not go check it out? All domain battle-tested solutions for today's battlefield. 50,000 autonomous systems. So here's, I guess, what they do. Autonomous systems, loitering. They said like high intensity or high beam intensity, high altitude satellites. Well, anyway, some sort of aerospace and defense company, which I'm sure that's why it's up 2% in the overnight market because of the whole conflict right now. So if we scroll out to the revenue, this is really what you want to see. That's incredible. Notice the past couple quarters specifically, the revenue grew 150%. It was 470 million. And again, analysts are expecting in 2 quarters for it to go to 565 million. And they're supposed to make 50 million in net income on that too. Oh, look at that. So some of the revenue, 20% of the revenue comes from Ukraine. Maybe they're like NATO, sending stuff to NATO members. They do have a forward PE of 159. So AeroVironment's an interesting one, but watch out because in 2 days they report earnings and that should move the stock either up or down a whole bunch. So, yeah, hey, thanks. Shout out the member. Let's go to MicroStrategy right here. This is a Bitcoin proxy, but historically, whenever Bitcoin goes up, MicroStrategy goes up more. But also recently, whenever Bitcoin goes down, MicroStrategy falls more. So it's kind of like a high beta, higher leverage Bitcoin. If I had to buy and hold one forever, just if I had to blindly pick for the rest of the time, if I had to pick MicroStrategy or Bitcoin, I definitely trust Bitcoin more and you'd probably get some similar returns. But MicroStrategy, the main metric you look at for them is their balance sheet. Because look at this. Like, look how this has changed. From literally a year ago, they had like 6 billion of assets. Now they have 73 billion or 61 billion of assets. How did they get all this? Well, from diluting the life out of shareholders. Specifically, like 1 year ago exactly, they diluted every shareholder and they sold $18 billion worth of their own stock and rose $18 billion of cash with it. And with that $18 billion of cash, they bought $18 billion worth of Bitcoin. And for a while, like that $18 billion of Bitcoin that they bought, they were up like 60% on it. That's why they were going up more, but it was also like pushing up the price of Bitcoin. There was almost like a self-fulfilling prophecy. Anyway, you really value them off the NAV, the net asset value of their Bitcoin. Let's see if we can get any Bitcoin holdings cost a 17 billion unrealized loss, heavily impacting EBITDA. Okay, well, anyway, yeah, that's just like a higher leverage Bitcoin, if that makes sense. So let's do PRME. Sorry about that, Zach. Let's check it out. Check oil futures, red. Yeah, Derek, oil futures are rough. They're up 17% right now. So here's Prime Medicine. You want to be careful with this one because if you look in the top right, they're only worth 720 million. So that's just a really small market cap, only $700 million. But let's see, do they have revenue? So not much revenue. This is what you really got to be careful with. The revenue is literally $800,000 for the quarter, and they lost 50. Oh, geez, that's actually really unfortunate. Here's the bad news. So if you kind of think about this from a just pure logic point of view, the whole company is worth 720 million. Let's say you buy the whole, like you could do this at this valuation. You buy the whole company, you pay $720 million, or you're buying a company that like every quarter loses you $50 million, or 200 million a year, or 30% of your market cap a year, all for a business that only did 800K in sales, and they're leveraging up their balance sheet from 48% to 64%. I bet there's a high short interest. Let's actually check out the short interest just for the fun of it. Yeah, so look at that. 15.5% of all the shares are being shorted. I can see why. There's obviously some sort of news I may be missing here. Prime Medicine focuses on liver franchise with the 191 million cash runway. See, there's certain news I don't know about. You just got to be really careful with the small market caps. And when they lose that much net income, like when the whole companies were 700 million and they lose 200 mil a year on average, it's really hard to trust with meaningful money. Just hopefully that made sense. So Lawston, what's up? He said CAT. This is a really growth. Oh, hey, Rob, I got to get to SES too. My bad. Remind me to get to that one. Caterpillar right here, a nice U.S. construction place. So as we've done all this tariffs and stuff, so many companies are bringing back manufacturing to the U.S. and anyway, in like mining as well. And Caterpillar just makes these heavy machineries, as you probably seen the heavy machinery from Caterpillar before, power and energy industry. They're in the construction industry, the resource industry for mineral projects and stuff like that. So they just benefit from the re-onshoring of a bunch of American construction again and manufacturing. So Caterpillar is a nice dividend growth stock, near a 1% dividend yield. They've had some crazy good stock price appreciation. I guess they're a little off their peak of 780, down 3.3% in the overnight market. But look at this forward multiple. I certainly wouldn't sell out of them. They're only at a 29 forward PE. A similar company that I own is a company called United Rentals. Yeah, here's my portfolio, by the way. We're down 1.7% right now. Yeah, I own United Rental stock. I got 5 shares of them. But yeah, look at the overnight market. Dang, RIP, hit the like button. RIP, the S&P's down 1.8%. No, did I say Powell's down 7? Oh, geez, we're going to lose a lot of money tomorrow. Oh, man. Okay, well, that's okay. Yeah, or it's already loaded in here. Like, look on the right, Comfort Systems is down 700, down 400, 100. So we're already down 3.8% in this portfolio. Okay, let's look at some more here, though. Should I dump Starbucks? I'm up 30%. It depends on what percent of your portfolio it is. I don't love... honestly, you could sell Starbucks and potentially buy something that'll give you a better return right now, especially because there's another huge dip. I think you could potentially upgrade your money, move it from Starbucks to potentially a higher quality stock. Even like a Microsoft, I'd trust more. You hold SoFi? I do own SoFi. Is monthly investment STRC worth it? This is like the strategy, stablecoin thing. Here's the risky part about this. So this is supposed to stay at like $100 at all times. There was a huge crypto crisis, like a hack or something, where it literally, like the actual stablecoin it's supposed to tether, decoupled by 10%. This was huge. Literally went from $100. It's supposed to always stay at 100. It fell all the way down to 90 and just kind of shows some weakness. So I want to trust it, but then again, I just don't know. They have a crazy 10% dividend yield, but I would just be very careful with the high yielding stuff. All right. Is PAGS, PAGS. So this is Sugero Digital. So I have not heard of this stock before. Did they just start paying a dividend? Looks like they just started paying a dividend or something. Let's see. That's a very cheap forward metric. They literally only trade at 6 times next year's net income. So, okay. So this kind of reminds you like an NU bank. So look at that. This is probably because of where the revenue comes from. They're mainly headquartered in Brazil. So 98% of the revenue comes from Brazil. and they are headquartered in Brazil as well. So they're headquartered in Brazil. 98% of the revenue comes from Brazil, but the money we're looking at right now, this net income, is in US dollars. So we've converted it from Brazilian currency to USD. They really do make 100 million or close to 100 million of real net income a quarter. Yeah, after tax net income every quarter. And so they're making 100 mil a quarter, which is 400 mil a year. The whole company is worth 2.8 billion. So yeah, they really do only trade at 6 times next year's net income. Huh. So some sort of Brazilian software company. Yeah, that's a abnormally cheap multiple. It might just be because of where they're headquartered. Microsoft or Amazon? Yo, what's up, coach? I really like Microsoft right now, but if I did just load the boat on Amazon though, so I just want to go over Microsoft because I don't talk about this one as much as Amazon. But out of all the stocks to like buy the dip on right now, I think Microsoft is potentially one of the best buys. It would be in my top 3 best stocks to buy right now, not financial advice. This is like an ETF in one. So many tailwinds from many different sectors, and like every company in one way or another uses Microsoft. And you won't believe how cheap the multiple is, for the Mag 7 behemoth Microsoft, only trading on the right at 23 times next year's net income. That is interesting. So I want to pull up some news because they just rose their prices for their software for the first time in a really long time. I wonder if I can find that news. No, I can't. It was so long ago. But let's see if there's any news here. So OpenAI launches Chat 5.4. So literally, if you didn't know, Microsoft owns 27% of OpenAI. So they own a bunch of OpenAI stock. But anyway, let's just go look at their actual fundamentals. So again, 23 times next year's net income. Their main business is this software. So a lot of software stocks, as you know, have been falling like crazy. And Microsoft is categorized as a software name because literally 42% of all the revenue comes from the software business. Think of Excel, OneDrive, Office 365, PowerPoint, all those Microsoft, products. This business does over 120 billion of annual revenue for them. And that revenue just hits a new record every quarter. So that is extremely impressive for their main software business. And not just their software business that's growing like a behemoth, but also their cloud. Their Azure cloud is actually the second largest market share. Number 1 market share is AWS, then it's Azure cloud, then it's Google cloud, then it's Oracle. But this does also over 100 billion of annual revenue for Microsoft. I mean, that is also impressive. And if we go to the net income right here, here's the ridiculous part. Again, we just saw the forward multiple. They literally only trade at 22 times next year's net income, but they literally make every quarter like 28 to 30 billion a quarter. Sorry, one sec here. Okay. Yeah, so I have no complaints on Microsoft. One thing being questioned is how much CapEx they spend in or how much they plan to spend in 2026. But I don't mind it. Microsoft back OpenAI with a 20% reduction in hallucination rate. So anyway, that's just an AI tailwind play with only a 22 forward PE. I love their software business, their cloud business, and their OpenAI investment. Great news. I actually do not own Microsoft, but I do own Amazon. That's actually a stock I've been loading the boat on. We're only up 5% on Amazon now. Amazon's literally at like a 28 forward PE. It's very cheap. Do you ever day trade or swing trade? Yeah, what's up, C? I very rarely swing trade or day trade. I mainly just buy and hold stocks for the long run. So I'm just not good at swing trading. But yeah, here's how my portfolio is doing on the day, or at least my Webull portfolio. AMD's down 3.5, Futu's down 3, UiPath 3, and so one sec, can we do UiPath? Or what's up, Haru? I am a bag holder of UiPath. If you look, actually, let me pull this up. If you look at the very bottom right, the first time I bought this stock was in 9/2021. So I've been holding this stock for over 5 years. I can list every single mistake that they made. Out of all the software stocks to buy the dip on currently, I would not buy UiPath on the dip. I'm a shareholder. I just think they are too cheap of a company to fully sell out of. Like, I do want to sell my position. They're just too cheap to sell right now. They do have some recent partnerships with like OpenAI, and they have a big net cash position. They're doing buybacks. And they're just now, for literally the first time ever, getting net income positive, which is good. But they've just been a disappointment. Kind of been out-innovated by like a Snowflake and Palantir. Uh-oh. TikTok's saying Wi-Fi issues. Oh, we're good now. Okay, sorry. We're good. Sorry if it lagged for a second. We're fully back. Yeah, here's Exxon. Exxon's up 3. Oh, Raytheon's kind of calmed down a little bit. Raytheon's only up 1.55% now. They were just up like 4%. But yeah, oil prices going up is not great for the economy. I've been investing in VOO, SoFi, Coinbase for the last 1.5 years, investing more into defense and commodity sectors. Yeah, it's always good to diversify into more sectors, especially for like times like this where you're like, dang, in the past I always put off buying oil stocks and put off buying aerospace and defense stocks. But again, I wouldn't really buy oil stocks right now at current prices, but definitely put some on your watch list to potentially buy when they do get cheap. My recent aerospace and defense purchase, I literally bought all of my shares on Friday. For the first time ever, I bought all my shares on last Friday. Is ticker symbol MOG.A. This is Moog. It's a great aerospace and defense stock. Benefiting from missiles, data centers, space. Pretty cool company. All right, next up, can you analyze Amazon? What a good ETF. Hey, what's up, Steve? Yeah, actually, let's just do Amazon. Yeah, Amazon is basically an ETF right here, an ETF in one. Let's see if there's any news. I know they just cut some jobs. Oh, Amazon literally buys $50 billion worth of OpenAI stock, and they plan to spend $100 billion on their AWS. Look at this. OpenAI pledged to spend $100 billion on AWS over 8 years. This is such a nice tailwind for AWS, which is already their most valuable, highest margin business. Amazon Web Services, or this is their highest margin business. Whenever they ship you an overnight or a package overnight, they don't make too much net margin on that, like a low single digit margin. But the AWS business has like 20% net margins. It's pretty incredible. I guess I can't get this to load. I guess my Wi-Fi just wants to not work today. Maybe I'll just reset the app real quick. And it should be good. But yeah, they print net. Actually, this has been like a margin expansion play. First off, they do the most amount of revenue of any company on the world. They do over $730 billion of annual revenue. They just passed Walmart. So they do the most amount of revenue of any company in the world. So they're actually technically the #1 Fortune 500 company. And so look at this. We just zoomed out the revenues at a record. So record revenue, not just record revenue. Oops. Record profits as well. Look at that on the right. They did $24 billion. You can't outspend Amazon, and you can't out innovate Amazon. If we go to their cash and investing activity spend, they spent $47 billion just this quarter and plan to spend like $50 billion for the next 4 quarters in a row. That's what I actually like about Amazon. They don't pay a dividend. They don't do share buybacks. They just invest all the money into all their businesses. They're in so many different businesses, like they're an ETF in one. They're a drone play, satellite play. They're like a Walmart, a UPS, an Instacart, an Oracle, all in one. Amazon launches 15-minute delivery service in Brazil. Amazon Project Juniper signs deal for satellite backhaul in Europe and Africa. And their huge cloud business. It's just like a great never sell company. They're a grocery store play with Whole Foods, and they deliver the groceries to you. Like that, they're actually like beating out every grocery store right now. That's why Sprouts Farmers Market is struggling, because Sprouts Farmers Market and Whole Foods, the difference is Whole Foods can deliver you the groceries. Sprouts Farmers Market, they don't have that online presence like Amazon does. And like at any store, anything you can get it, like a Target, you can just get on Amazon. Kind of crazy. Oil gets to 120 plus, it'll be a heck of a short. Yeah. Maybe even sell cover calls on them. All right. Let's see here. I saw Iris Energy. Chinzy, what's up? Can you check PGY? What's up, John? How you feel about AMPX? Yo, we'll check those out too. Let's check out PGY first. This is a really interesting software name. Dang, they're down 5% in the overnight market. So that is unfortunate, but they have a extremely cheap valuation. Actually, if you look in the very top right, you see the market cap. This whole entire company is worth only $948 million. So just beware, they're a small company, only worth $948 million. But here's the thing. Out of all the companies worth $948 million, I want to buy the one that makes 20 plus mil in net income a quarter. They had a little one-time adjustment. It says they lost 250 mil that quarter. They didn't actually. Actually, let me just go to the net income projections right here. Yeah, look at this. Next quarter, they're expected to make 20 mil and then 30 mil. So for a $900 million market cap, company doing 20 to 30 mil a quarter, I very much like that. And again, the forward multiple is like commodity type cheap. Are they not gonna load the forward multiple? All right. Oh, there it is. Okay, so a 7.5 forward PE. Like the current PE is a 12, but the forward PE is a 7.5. So yeah, they're already profitable. Where does the revenue come from? So the US is where the revenue comes from. They're headquartered in New York. Let's actually go check out their website to kind of go to their website. Invalid. Okay, I guess we cannot view their website. Oh well. Well, we tried. All right. How do you feel about AMPX? Let's check that one out. AMPX, what is this stock? Ampress Technology. So, oh yeah, this is that battery company. I want to be careful with this one. So this company is at an all-time high right now. So yo, congrats if you own this stock. And I can also understand why they've had so much positive momentum because they are crushing analyst expectations. So if we go to what they are reporting versus what the analysts are expecting, it's quite impressive. And this is like a transitional year for this company. Can you check Goldman Sachs? I want more Amazon under $200. Yeah, we'll check out those stocks for sure. Okay. My screen, I just realized, just cut off on me. Sorry if it's lagging here. That's my bad. Please? TUO.F, speculative hold. Okay, there we go. Sorry. So here's Ampress Technologies. I didn't realize it was that bad. Okay, look at the revenue. It's going from 15 million to 27 million year over year. And notice how every quarter they beat by a good chunk on what the analysts are expecting. So look at this. If we zoom out to the revenue, this quarter was a record. It's never been higher before. They did 21 mil of revenue. And analysts are expecting next quarter 25, 27. And notice how they're narrowing their losses. This is the best news ever. They basically lose nothing. They lose no money. This quarter, they only lost $3.89 million. That is a very little amount of money lost. So look at this. As the revenue is growing, they're narrowing their losses. So they are making a good margin on the sales. And what do? They sell like these alternative batteries, I believe, if I remember correctly. Electrical equipment and parts, engages in manufacture of lithium-ion batteries. Or are they the manufacturer? They might be the manufacturer. Anyway, performance powered by silicone anode lithium-ion batteries. So Nokia Drone Networks integrates Ampress batteries. So look at this. So the Nokia drones use their batteries. Secures a repeat $35 million purchase from a leading UAS manufacturer. So I guess here's some of the stats on their batteries. Anyway, I like their top line growth. I can see why they've done so well. Let's see if I can find this one. TUO.F. I hope I can find this one for you. Let me know what the actual name of that company is, Larry, and I will type it in and find it for you. Oh yeah, let's do Goldman Sachs. This is a great bank. So one of the better performing banks. I'm actually impressed on how good the banks have done. Obviously, they're a little off their all-time highs because some of the fintech names have been struggling the past week or so. But let's see if there's any news around this company. No, there's not. So anyway, let's just go look at their fundamentals because they are just impressive. And they're a dividend growth name. If you buy the stock right now, you're pretty much getting 2% of your money back just in a qualified dividend every year. And look at how they raise their dividend very fast every year, way faster than inflation. So you get a 1.7% yield, only a 27% payout ratio. And look at the forward multiple. They only trade at 13 times next year's net income. That's why I think any banks kind of always trade at like a mid-teen multiple, but I believe it could go even higher. And I like the asset and wealth management business, like mainly they do banking, but I like the asset and wealth management where they just collect like a high margin fee for managing your assets. And if we go to their net income right here, I bet it's going to be like $5 to $6 billion a quarter. Or no, okay, that's okay. It's still a pretty good number. Oh, if it wants to show up here. Ooh, I see Realty Income stock. Dude, my Wi-Fi has just been having issues all day. I apologize. Oh my goodness. There we go. So look, they do around 4 to 4.5 billion of net income a quarter. Let's zoom out. Yeah. Uh, wow, 2021 and 2022 was phenomenal for them. But anyway, they traded a 13 multiple. It makes sense. And I know they do a lot of share buybacks. They do, they raise their dividend every year, so they're shareholder friendly. It's like a JP Morgan competitor, a little smaller. BYDDY. Let's do BYDDY, and then we'll do realty income. Is that what you mean, Norbero? You want me to look at realty income stock? We can do that one. So this is basically your Chinese manufacturing play. And yo, Ocean, shout out to the homie Ocean for the cake gift. I appreciate that. Yeah, BYD stock. It's basically your Chinese Tesla. So let's convert the currency to US dollars just to get a bit of a better idea here. And look at this. Tesla trades at 250 times forward PE. Well, here's BYD. They trade at 20 times forward PE, and their cars would be all over the US if we didn't tariff them. But yeah, they make good net income, like 1.5 to 2 billion net income a quarter. Do we get projections? Guess they've been missing on expectations the past couple quarters. But anyway, yeah, they're making like 1 to 2 billion net income a quarter. So kind of like your Chinese Tesla, much lower valuation. And they're now penetrating deeply into the European market. Let's see if we can find any news. BYD launches multiple new models, second generation blade battery, flash charging tech. BYD to hold disruptive technology event on March 5th. BYD's global EV market share declines to 13% in January 2026. So actually that's a huge market share though, still a 13.8% market share. So a company called Geely outsells BYD for second consecutive month with 206,000 units versus 100. What is Geely? I've never heard of that company before. I believe Warren Buffett's company, Berkshire Hathaway, does own BYD as well, which is interesting. It's weird how they bought BYD over like actual Tesla. Oh, let's do a TERUMO. Oh, we found this stock actually. So they're a Japanese company. And then we'll look at realty income after this. That's a REIT, a pretty cool REIT. Yeah, if you guys got any stocks you may look at, let me know. We'll also get to Nebius, some of these other ones I see. So here's Terumo stock. Wow. Okay, wait. Is that in US dollars? Let's convert the currency here. So we'll convert the currency to US dollars. It says there has a market cap of 3 trillion, but I don't know if that's in US dollars. So a cardiovascular company. So they're in medical devices, I'm guessing. So cardiovascular, medical care solutions, blood and cell technology. Well, let's go see what kind of net income they're making. Can we get this on a quarterly basis? We can. Check this out. And this is in US dollars as well. They really do make like 200 plus million of real after-tax net income a quarter. You get a good dividend too, a 1.4% dividend. So Precision Instruments, comprehensive medical device player. So a comprehensive medical device company. I don't think we're going to be able to view their website because they're Japanese, but let's see where their revenue comes from. So actually, even though they're headquartered in Japan, their largest segment of revenue comes from the US. Then they have Europe is 21, Japan is 20, Asia and others. So anyway, an interesting medical device company with a really good balance sheet. Check that out. Very low leverage. It's impressive. So let me pull up realty income right here. This is a good stock you buy if you want to maximize your dividend income. They're called a REIT, which means 90% of their assets are real estate. What do? They do triple net leases. So they have like incredible gross margins, like a 90% plus gross margin. But anyway, if we look right here, this is the most impressive part. They have a 5% dividend, and this is monthly. Look at these payout rates, like 227, 130, 1231, 1128. They literally pay you 27 cents every single month. They're in the S&P 500. They're a dividend aristocrat, which means they never cut their dividend once a single time during 2020 or 2008. Yeah, let me show you the gross margins here. That's because they're a triple net lease REIT. But the bad part is in the long run, you won't outperform, the tech-heavy S&P 500. Like technically this stock, or let's zoom in here, this stock is the same price as it was back in 2019. You really don't even look at the chart because you look at the dividend reinvested chart because most of your returns are going to come from dividends anyway. But interesting name here to maximize your dividend income. One of the better REITs, but not too growthy, but good dividend. Perfect for a Roth IRA. Hey, what's up, Larry? Yeah. Oh, Brian said comfort systems. I'm not sure of the retail space. Oh, yeah. So that's a good point. A lot of Realty Income's main customers are risky clients. So Walgreens, dollar stores, are like a huge company, like gyms. Those are big customers of Realty Income. I wonder, and like casino, like gaming properties. Um, I wish it was more like I love a BRX stock. So if you like Realty Income, BRX focuses specifically on grocery stores. I'm very bullish on like the grocery store industry specifically because all their top tenants, like their biggest tenants are Kroger, Publix, TJX, Amazon Whole Foods. Those are like their biggest tenants on BRX Brixmor. Another REIT that has a high yield because they have to, 4% dividend yield. I've actually made a video on that one. I wonder if it should be on the comments here somewhere. I made there's my old video on that one. Yeah, I'm making a video on Realty Income. Care Trust. I should go over Care Trust as well. If you like REITs, this is a senior housing REIT. Very bullish industry. They've been one of the best performing REITs out there, specifically because of how growthy they are. If we go to the revenue right here, this is super impressive for a REIT. The revenue is at a new record. They did 134 mil of revenue. On the 134 mil of revenue, they netted 112 mil. They have no debt or no net debt. They're one of the most under leveraged, no leverage, under leveraged REITs to exist. And they have a good dividend as well. Even if you buy it today, you're still getting 3.4% of your money back into dividend. So they're actually one on my watch list that I want to own in my Roth IRA. I only own one REIT right now, and that's Iron Mountain. I own them in this portfolio. I don't have much of them. I got 4 shares. But yeah, RIP, the overnight market. Check this out. Here's what I'm down the most on. AMD's already down 3.7. Futu's down 3. Apple Oven's down 6. So, zoinks. So Brian said comfort systems. Yeah, let's do comfort systems real quick. So this is my largest holding out of every stock that I own. This is my largest stock. What do you think of COPX and TAK? Yeah, we'll check those out too. So Comfort Systems is my largest holding. They have just impressed me on every financial metric. This is the textbook example of what I want to own. It's a kind of a tough buy today because they're a little expensive. On the right, they're at a 34 forward PE, but they certainly deserve a 34 forward PE. They have a $12 billion backlog, which is over 20% of the market cap. They're mainly an MEP play, which is mechanical and electrical play. If we look at their mechanical business, this grew 25%. After it grew 42%, after it grew 18%. So they're on a streak of growth here. But the main winner specifically recently has been their electrical segment. They're doing the complex electrical work for data centers. That grew 98% year over year. After it grew 23, after it grew 33. So absolute crazy growth, beating on every analyst expectation. Look at this. Analysts for the past 3 quarters in a row, they beat like crazy on earnings. They beat on revenue. They beat on net income. They beat on EPS. They beat on EBIT. It's not some one-time adjustment making the net income this high. They really are beating on EBIT. And if they're going to beat like crazy on this quarter, they're going to be beating I'm almost betting they're going to beat like crazy on these next quarters. So really the forward PE is like a 29. If my math is right, and that's why this stock is easily like a $1,600 stock at a fair value in my little bit of a bullish eyes. That's why even though I'm up 230% on this stock, I have not ever trimmed or sold a single share of this company because I continue to think they're going to go higher. And also look at this, their net income this quarter was $330 million after tax. Before tax, they made 420. After tax, they did 330. And check this out. They made 330 million net income with no debt. By the way, they have no debt. Their dividend only cost $21 million. The super low single-digit payout ratio, and so they do massive share buybacks. They did 100 million of buybacks this quarter, and they bought a company for $230 million this quarter. So they're just returning money to the shareholder. They're beating on earnings every quarter. Huge data center tailwind, huge backlog, huge net cash position. I have nothing bad to say about the stock, and they're not even ridiculously overvalued. So a big, interesting stock that I like as well. If I didn't own Comfort Systems, I would check out MCore. A long time ago, Comfort Systems had to sell off like 30 of its subsidiaries to MCore back in like 2008 to save them from bankruptcy. These are two very similar businesses. They also do mechanical and electrical work. They're the same industry, but a cheaper multiple. They're at a 24 forward PE. And again, look at this. Their mechanical construction business, that's up 17% year over year. And their electrical construction business for EME is up 43. So they're experiencing that same growth, but Comfort Systems is growing even faster because their offsite modular strategy, where they construct the whole modular HVAC system offsite and then deliver it. But MCore actually makes them custom like on-site. So Comfort's a little bit of a different, but that's another really interesting one that should definitely benefit from data centers as well. Well, let's do let's do COPX. Oh, wait. Hey, Ocean, thanks again for that cake there. I do appreciate you. And then we'll look at TAK. Got to head out. Been enjoying. Hey, see you later, Brian. I appreciate you. What's up, Cruz? I hope everyone's having a great Sunday. What's up? I know market's a little red right now, but here's COPX. This is called the Global X Copper Mining ETFs. So it must own, like, I bet Freeport McRowan's on here. Oh, yeah, it's 5% of the whole company. This is my favorite personal copper stock if I just had to pick one. FCX, how's Southern Copper doing? That one's done really good as well. But anyway, yeah, if you don't know which one to buy, like, I don't know if you didn't know what to buy FCX or whatever, I guess you could just buy this ETF to kind of diversify your money up into all the great copper stocks. So this is kind of a play on the commodity of copper. There's also like a gold, like IAU is the commodity of gold, which is actually down. You know, oil prices are up like 18% right now. Actually, I'll show you that. But gold is down 2%. You'd think they kind of be somewhat similar. Oh, that's the wrong watch list. Let me go back to oil. Yeah, look at the very top here. Oil's up 19% right now. Pretty ridiculous. Actually, let me go check out my portfolio really quickly and how the market's doing. Yeah, look at this. My main dividend-only portfolio is down 1.8% right now. CEG's down 3.6. Meta's down 2.5. Meta is such a good steal of a deal right now. Yeah, and here's the SPY down 2%. So what do y'all think is a good buying opportunity next week? I saw, SoFi too we got to get to again. But yeah, historically, these like war fears, they're almost always like buy the dip opportunities, or they always have been for like all of history. So let's do TAK real quick. So this is Takeda Pharmaceutical. So they're a Japanese company. They're worth $56 billion. So let's go analyze them. So 51% of the revenue does come from the United States. Let's see, revenue of, and this is in US dollars, $7.6 billion. They kept around $800 million on that when you include taxes. The profits have kind of been flat for a while. Maybe that's why the stock has been flat for a while as well, because the profits haven't been growing too much. Like the net income actually looks a little bit more choppy than that. Do they have a dividend? So you get a 3.5% dividend. So you get a really high yield with this name. I don't know. I probably would rather own an AbbVie, an ABBV over this one. Again, I'm not too sure what exactly they do. It says research, manufacture, marketing of out licensing of pharmaceutical products. So, I wish I could give you more thoughts on them. Data centers are a full trap. I don't like the data center stock specifically, but I'm going to buy the picks and shovels plays like an Amphenol who supplies the fiber optics and copper cables for data centers and GPUs. Like I'll own NVIDIA and Comfort Systems who cools down the data centers, or Comfort Systems that cools down the data centers and chips. Just kind of like these AI beneficiaries. But yeah, I don't want to own the data center itself. So Heather said, how about NOV? And then we'll get to some of these other ones. Yeah, what's up, my music? The market futures are looking brutal. Oh, yeah, then SoFi too, I want to get to. So here's NOV stock. Yeah, hey, what's up, Heather? NOV, I have not heard of this company before. They're worth $6.69 billion. They pay a dividend to, what industry are they in? So energy equipment. How's that doing? That must be doing good. And then energy products and services. So check out the most recent quarter. They had a good beat on expectations. Analysts expected 2.16. They did 2.27. So, and they beat on EBITDA. It looks like they had a slight one-time adjustment to their net income. They were supposed to make 90 million, but it says they lost 90 million. So I'm assuming that was a little one-time adjustment. Because yeah, the operating profit was 160 million. So they didn't actually lose money. It was some one-time adjustment. But one thing I do notice is the revenue is kind of slow. It's actually negative. So if you look at these revenue year over year comps, they're actually all like negative single digit, like -1, -0.6, -1. So we kind of want to see the growth come back to the revenue. Because look, they have a 2.75% dividend yield. So oil and gas equipment, they're headquartered in Houston, Texas. We power industries that power the world. Energy transportation. So, some sort of company like that. We definitely, maybe they're just kind of, dang, the stock has not done too well. Dang, technically this stock is the same price as they were back in 1997. So we just kind of want to see them start to grow more, but they've done pretty decent the past year. Let's do SoFi. So I do own this company, full disclosure, and I'm going to show you why I own this company. They're down 5% in the overnight market. So RIP my SoFi position. I'm going to get an opportunity to buy a little bit more, and I probably will be buying a little bit more SoFi. So if you wanted SoFi as 5% of your portfolio, I do not recommend you making it 5% of your portfolio today, but I kind of recommend you go ahead and make it like 1% because they're at a very attractive valuation, in my opinion, not financial advice. If we go to their forward multiple, so they're only trading at 28 times next year's net income. That is very appropriate for a company growing at this caliber. Let me show you how fast they're growing. Specifically, their financial services business has been the main growth driver that's beating all analyst expectations. In 2020, the full year, this business did 11 mil of revenue. But for the full year 2025, it did 1.54 billion. In just the most recent quarter, it did 456 million, up 78%. After grew 85, after grew 114. Like these year-over-year growth rates in the middle, no analyst could have predicted this. They did not expect it to grow that fast. We can even see the analyst expectations. It's the orange number. They beat on revenue. They beat on net income for the past 3 quarters as well, like crazy. And if you notice, the expectations are just up and to the right. Net income is supposed to hit 196 million in 2 quarters, a record. So that's why I think people are really starting to take SoFi serious. They're at an attractive forward multiple. JP Morgan, I think, took a 3% stake. They're making a couple $100 million net income a quarter. Let's see if there's any news down here. I know they're applying. Oh yeah, look at this. SoFi CEO actually purchases 1 million worth of the company's shares. SoFi launches SoFi USD stablecoin, first nationally chartered bank to issue a stablecoin on the blockchain. So pretty cool. I really do like SoFi. I can't believe it's down again, Grr. Yeah, I can't believe it either. We're certainly not going to be selling anything, but it's a good time if you have any leftover cash to go shopping, buy some high quality companies that you just want to buy and never sell. Even if you don't perfectly time the bottom, like even if like you buy a little bit of SoFi today and they fall another 5%, like in the long run, our thesis is this is like a 3-4x in a super long run. So it doesn't matter if we miss this local bottom by a couple percent. So it's definitely not good to see our stocks go down. We're down 1.7%. Yeah, here's my Roth IRA. We're down 1.28%. Innodata's down. Here's my total percent change on every stock. We're down like 34%. Chromatics, we're down 39%. Hey, what's up, Sean? What's the CPM? I don't know. Not like the RPM is like a 3 or 4. So Kevin said ONDS. So Ondas, this is, I think, like an autonomous drone company. What's a safe covered call strike? Well, it depends on what asset you're talking about. Maybe like sell calls on oil. That I wouldn't call anyone crazy for selling calls on oil. But yeah, here's Ondas right here. This is a bit of a smaller market cap one. You definitely want to be careful. Ooh, Novo Nordisk. We'll check that one out too. Actually not that small. If you look in the top right, they're worth $4.4 billion. So still like a small mid-cap company. So Ondas Autonomous Systems. I do wonder if that's like drones, but why the stock has had so much momentum and gone up so much, it's not solely momentum. It's because the fundamentals have actually been beating expectations. If we go to their revenue right here, they're basically transitioning from a company that used to do like a couple mil of revenue a quarter, or sometimes like under $1 million, to this quarter was a record $10 million this quarter. It's never even been close to this before. And they're not done at $10 million, and analysts don't see them being done either. I say this because next quarter specifically, all eyes are going to be watching this company because it's basically a transitional quarter. They're supposed to go from 10 million to 30 million next quarter, and then 28 million the quarter after. So we definitely don't want to see them miss on these numbers. And if they beat on these numbers, that will probably just momentum the stock even higher. So we're really just watching these next two earnings reports as they basically convert from doing 4 mil a quarter to 28 million, which is over 100 million a year annualized. So it really is a real increase of the fundamentals and real order. So it's a drone concept stock. That's what they're categorized as right now. Mission critical networks. So like a picture. Yeah. So I'm guessing, yeah. So they do drones, stuff like that. Ondas to acquire Rotron Aero, expanding long-range attack capabilities and unmanned vehicle technologies. Ondas 4M Defense secures 30 million multi-year program in Israel. Okay, well, anyway, some sort of a drone company. Still got to be careful. I think they lose money and they're just now getting their first ever sort of revenue. Watch out for the next couple of quarters. But I can see why people like that one. Maybe have it as a really, really small position. Hey, thanks, Sean. I appreciate you. Oh, yeah. So Novo Nordisk, this is your weight loss company. So if you've ever heard of Ozempic, like Elon Musk is on Ozempic, it's that weight loss prescription. This is the company that owns it. And they also own Wegovy. They have like the largest market share for weight loss prescriptions, but there's a lot of things crushing the stock price and hurting their multiple. One big elephant in the room is their patent expiration. They literally lose their exclusivity for Ozempic in under 3 years, or in 2030, they lose their patent for Ozempic in Europe and China. So they're losing their exclusivity soon, and they're being out-innovated right now by Eli Lilly. So there was just a test conducted. It literally sent Eli Lilly basically to all-time highs where they compared Zepbound to Wegovy. Eli Lilly's prescription did significantly better than Novo Nordisk's did. And that's why they fell on this day right here. There was no earnings report this day. They just had bad results of their weight loss prescription. So that's the bad news. I think that's really crushing their multiple. Notice this, the current PE is a 10. The forward PE is an 11. So that means the net income is projected to fall, which is not great. But yeah, pure weight loss play, 94% of the revenue is their diabetes and obesity care products. But look at this revenue projection. It's going from 12 billion and it's falling to 11 billion. So it's kind of just like sadly, the growth story might just be gone for this company. I wish I'd had more positive stuff to say about them, but there is some big news. Novo Nordisk is ending their legal dispute with Hims and Hers. So that sent that stock up like 20%. Let's see. Novo Nordisk settles legal dispute with Hims, forms partnership, to distribute their stuff again. Yeah, Eli Lilly's been doing great. Let's see. Dow down over 1,000 points. NASDAQ down over 600 points. And oil's up to 110 a barrel. Yeah, isn't that nuts? So yeah, here's crude oil futures. Yeah, 109 right now. Look at that chart. Like this was basically before the Iran conflict and stuff, and 64 to 109. I'm sure that's not great for the economy. Not great for the next time you go fill up your gas tank. So yeah, ExxonMobil's up 3%. Chevron's up 3% right now. Next week should be really interesting. Yeah, we're getting cooked right now. My portfolio too. Yeah, with this portfolio, my Weeble's already down 2.4%. Here's my all-time performance in here. We're only up 5% all-time in there. This portfolio, look in the top. We're already down just today, just in overnight market, $1,500 or 4.3%. Hit the like button because we just lost a lot of money. Same with our main portfolio. We're down 1.7% here. So but I'm certainly not panicking and going to sell out of anything. I'm going to be looking to hopefully buy the dip on some great names. Yeah, dang, Powell's down 7. Conversations is down 5. Usually these are great buy the dip opportunities. All right. Looks like this was the Iran conflict was the straw that broke the camel's back. Let's do, Okta. Let's do Okta. Hey, what's up, Cool Money? Good to see you. I appreciate everyone on the stream. Yeah, hey, TikTok already removed my stream from For You page eligibility. So thanks to everyone on the YouTube stream. Yeah, if y'all want to support me, best way to support me is just hit the like button and watch the stream from YouTube. My YouTube channel is called Nathan Robert. You just type into YouTube though, Nathan Robert. I'm also streaming on there. But yeah, here's Okta. This is a software company. And every time I log into my college software, I always see in big letters in the bottom right, like Okta. Guess I am kind of a customer, but they are just now getting net income positive. Like if we zoom out, this was a tough buy a year ago. They were losing like 100, 200 mil a quarter. Well, now this company's in a situation where they're making like a 50 million plus of net income a quarter. And let's see the projections. Net income, yeah, look at how they're beating on net income every quarter. They expected 36 million, but they did 63 million. They beat on revenue, net income, EPS, EBIT. So what we're seeing is a stock that's not declining because they're missing on their earnings report. It's literally just sentiment around the whole software sector. Their chart looks just like a DocuSign, like DocuSign as well. Like they peaked like crazy back in 2021 and now they're down bad. Like Roku too, like a Roku as well, where they're not missing on earnings. They're just like beaten down. So, I don't know if Okta has a moat. Let's actually see if Morningstar covers this company. So Morningstar gives it so economic moat, they give it no moat. They didn't do much research on that. Anyway, like they seem really interesting because they're not falling because they're missing earnings. They're actually beating like crazy on their earnings report. It's just they're a software stock, and all of software is, I guess, getting crushed now, like an Adobe, a Salesforce, and I guess this one's no exception. So I'm not seeing anything in the financials that really scare me out of this. A good balance sheet. So, what was the reasoning behind your latest post? Yeah, hey, I don't know. I was just bored one night and I wanted to make I was just feeling like making a big post around that of Moog, and I'm like, let's do it. Hey, what's up, Plasma? Hope you're having a great day. Yeah, what's up, dude? Oh, hey, Tingrika, no way. Thanks for the 40 roses there. I really do appreciate that. What's on your shopping list? Yeah. Um, some stocks are already owned. I'm potentially looking to buy more. Like, definitely, I'm looking to buy more Reddit, SoFi, Robinhood. I want to get more Meta because if I go in here, Meta is my smallest position. It's $3,200. I want to get it closer to like a $4,000 position. Amazon, I'm trying to buy more of. Like, I've already spent all my cash. Unfortunately, like if I go to Amazon right here, like just 2 weeks ago, we spent $1,400 buying like 7 new shares of Amazon. So yeah, now everything's down on the day. We're already down 4.3% in this portfolio right now. So RIP. But yeah, all those companies right there. What are the 2x and 3x leverage ETF? Dangerous but curious. Yeah, I would just stay away from those, like TSLX, or basically they just, oh, actually that's not the Tesla leverage ETF. Anyway, like if Tesla goes up 1%, that would go up like 2%. NVD. Oh yeah, like NVDX. So this is the 2x long daily NVIDIA ETF. So NVIDIA goes up 1%, this goes up 2%. But if NVIDIA goes down by 1, they go down by 2. I don't know. Hey, no way, Cruz. Shout out to Legend Cruz on the YouTube stream with the super chat. No way, Cruz. He says, I want to get some Amphenol, Corning, FCX. Yo, those are good copper plays. Or Amphenol. Wait, is FCX Freeport? Let me see. Oh, yeah, it is. Oh, wait, I forgot to get to Palantir. What's up, Kevin, Jordan? Let me get to Palantir. Then we'll look at Amphenol and Corning. Yo, Corning's a really cool company. They make like the Gorilla Glass for Apple, one of their biggest customers. And they have a huge customer for them is Meta for their fiber optics. So here's Palantir right here. They're actually seen as one of the beneficiaries from this conflict that's happening. I can pull that up right here. Yeah, so Palantir benefits from US-Iran conflict as defense AI demand increases, and they secure a $1 billion DHS contract. Really impressive, because most of the revenue does come from the government. Like a lot of police stations, the Air Force, the Army uses their software. This business is up 60% year over year. After grew 41, after grew 16, after grew 19. So they're just on a streak of growth for their government revenue. Like this is the highest growth rate on the entire screen, 60% year over year. And if you go to the commercial side, commercial revenue's up 82%. After grew 31, after grew 32, after grew 17. So this is even growthier with companies like GE Aerospace and Google. Like they're just so growthy, beating on expectations every quarter. Analysts expected them to do 460 million net income. Well, they did 608 million, an incredible beat on their net income. They made 611 million just this quarter. They have no debt at all, literally a debt-free company. They have 7.12 bill or 7.18 bill of cash that just hits a new record every quarter. So I can see why this stock has done so well. The only bad part is because I'd love to own this company, I just can't because they're so crazy expensive. They're trading at 127 times next year's net income. It's a big difference from its current P of 250. So their net incomes, their EPS is basically going to double in a year, which is great. So it would look like a PEG ratio, but too expensive for me to buy currently. But I can see why they're doing so good, and this conflict should only help them out even more. All right. What should we look? Oh yeah, Amphenol and Corning. Yeah, actually, let's just start with Corning right here because this one's a cool one. So Corning right here, again, they make the Gorilla Glass for Apple screens. They're down 5.5% in the overnight market. Yikes. And look at this. Corning secures a $6 billion fiber optic cable supply agreement with Meta through 2030. Corning launches Gorilla Glass Ceramic 3. So pretty diversified company. So yeah, their main business right here is optical communications. Then the display revenue is the display, which is Gorilla Glass. 43% of the revenue comes from the US, China's 31%. But anyway, they're, I guess, a little expensive, right? A 42 forward PE, but they certainly deserve a high multiple because of all these deals that they're getting recently. Yeah, look at this. Actually, let me show you the margin expansion here. So the revenue grew by 20% year over year. So the revenue's up by 20, but the profits are up by 71% year over year. So that's just margin expansion. So I'm really impressed with Corning. If I didn't own Amphenol, I'd potentially buy this one. They have a near 1% dividend yield. Yeah, really good company. I love that Meta deal that they just got. My personal play is Amphenol stock right here. I saw you also mention that one. They're down 3.4% in the overnight market. I actually might look to buy another share because they're now at, it's not going to include it in the forward PE, but they're now at like a 7 forward PE, which is like extremely cheap. Okay, so let's pull this up right here. Yeah, look at that. Right now it says a 28 forward PE. It's really like a 26 or probably like a 27 because they're down 4% in the overnight market. And I can very much get behind paying a 26 forward PE for the growth that Amphenol has. They're known as like the nervous system of AI. Their communication solutions revenue is booming. It's up 77% year over year after it grew 43%. Like these are the kind of growth rates you want to see. Incredible growth rates. These are all mainly from like data centers. Two of their big customers are NVIDIA and Google. NVIDIA's NVLink Spine products uses their copper cables. Same with Google's TPUs. We can also, they're also like 10% of the revenue comes from aerospace and defense customers. So their harsh environment solutions revenue right here, that is up 31%. After it grew 39, after it grew 12. So another extremely growthy business. And they're also in interconnect and sensor systems, all just like beneficiaries from AI, which is up 21% after it grew 4.6. So they're accelerating the growth rate there. They print net income, 1.2 billion net income. If we zoom out, this is the most profitable they've ever been, the past 3 quarters specifically. I can't believe how good the net income grows, and not just the net income, but the actual FCF, which is free cash flow. They made this quarter 1.47 billion of free cash flow, 1.21 billion net income. Just all good numbers, like just the total revenue, the sales, the lifeblood of the company is up 49%. And they're doing a bunch of acquisitions as well. You get a good dividend, good forward multiple. It's really interesting, yeah. Actually, they have a 0.7% dividend yield and only a 22% payout ratio. Pretty interesting for Amphenol. And then, yeah, FCX, we could do this one too. BBAI, we can check out BBAI. Unfortunately, I have nothing too good to say about the stock because they are kind of, they missed on their army revenue. But yeah, this is a copper play right here. Let's see if I can see any news here. U.S. military action in Iran triggers commodity sell-off. Copper prices fall 2.7%. Q4 unit cash costs surge 59% to $2.22 per pound following the Graysburg mine suspension. So some supply was taken off the market. Well, anyway, actually, let's see if we can get like an earnings hub recap. So copper sales totaled 709 million pounds with an average realized price of $5.33 per pound, impacted by a 10% volume reduction from the Graysburg incident. A phased restart aims to restore 85% production in the second half of the year. Operating income of 811 fell short of estimates. The company maintained strong liquidity with 3.8 billion cash and only net debt of 2.3 billion. So they actually do have a good net cash position. They're only at a 23 forward PE. So this is like a pretty interesting, pretty fair forward multiple. Well, for a commodity, but it might be a little expensive. But yeah, copper play, 23 forward PE. They make good net income. 500 mil to $1 billion a quarter. They pay a dividend too. over 1% dividend yield, and the payout ratio is going even lower because look at the EPS. It's going, or the PE ratio is going from a 39 to a 23. So they're going to grow their net income insanely fast. So where does the revenue come from? So the US is 34%, Switzerland's 20. Everyone needs the commodity of copper. So anyway, pretty cool. Thinking about buying into Powell and Arista Networks, just don't want to FOMO after such a long run up. That's a good point. That's why you want to slowly dollar cost average, especially in today's environment where stocks just kind of keep falling down. What was the last stock you looked at? I forgot. I want to check them out. Hey, by the way, I'm streaming on YouTube. You are able to rewind it on the YouTube stream. I don't remember. It was GLW, Amphenol, FCX, or Amphenol, Corning, one of those. But here's Powell Industries. This is another stock I do own. So full disclosure, I do own the stock, but let me tell you everything I love about this company. I'll give you a deep dive. So first off, they have $500 million of cash and no debt. The whole company's worth $5.8 billion. So actually, and it's down 3%. So almost 10% of what you're paying of the market cap is literally just their cash on hand. So the forward PE is a 29. So this company is and I forgot to mention the backlog. They have a $1.4 billion backlog, which is another 20% of the market cap. So when you do an X cash PE multiple, this company is way cheaper. And look at how they're beating on net income every quarter. They expected them to do 35 mil. They did 42 million. So yeah, they did 42 mil in net income this quarter. Let me show you the cash. Yeah, look at this. Their cash on the very right, they have $500 million of cash. Yeah, and if we click on debt right here, they're saying oh my goodness, hold on here. Sorry about that. Making me fill out CAPTCHAs and stuff. Yeah, if we go to debt down here, they have no debt at all. Or the last quarter they had debt was in 2020. They had $400K of debt. They literally have no debt. $500 million of cash, and their cash pile continues to grow. And what I love specifically is this is a dividend growth company. So they pay a dividend, and that dividend only costs $3 million a quarter. Literally only $3 million. They make $40 to $50 million a quarter with $500 million of cash on hand doing nothing. So I think this dividend is going to double and triple in the years to come. And since they have so much leftover money, they're doing share buybacks. So this quarter, they bought back $14 million of their own stock. And also, remember how I said they have $500 million of cash? On the very top right, look at that. The cash went from 370 to 500 mil. This $500 million of cash isn't just sitting there doing nothing. I've deep dive into this company. They keep their cash in short-term T-bills, which are 1 to 3 week treasury bonds, and earn interest on their cash. So literally just an interest on their cash. They made $4.27 million. So they literally made more interest on their cash than the cost of the dividend. So the dividend is basically free. Plus the huge backlog, the no debt, the forward PE of a 29. It's an interesting name. Again, I'm still up over 500% on my shares. I guess here's where I bought it down here. I bought my shares at $78 and it's $480. I put it on the watch list potentially. So one other reason I'm really bullish is because 40% of the revenue, and this is why they used to struggle back here, 40% of the revenue comes from oil and gas / petrochemical / LNG customers. And I'm actually now really bullish on these LNG petrochemical companies spending more now that they're making probably a lot of money with these elevated oil prices. You look, crude right now is up 21%, basically to a record high. It's unfortunate for the economy, but maybe a beneficiary to Powell Industries in one way or another. They're main cut, literally 40% of all the revenue is petrochemical. Oh yeah, BBAI really quickly. I think, yeah, so here's the thing. If we look in the top right, they're a $2 billion company. Here's the bad news. They lost their growth. If we go to revenue right here, the revenue is negative 37% year over year. So that's not great. The revenue went from 40 mil to only 27 million. They lost an army contract. Sorry, I'll pull that up for you right here. Yeah, Powell is doing a stock split. Yeah, you're right. But yeah, look at this. The number one line. Revenue dropped significantly due to lower volumes on U.S. Army programs, impacting overall top line performance. But look at this. Their acquisitions of Ask Sage and CargoSeer expanded AI and analytics capabilities. So they, I guess, acquired a company called Ask Sage or something like that. But I'd just be very careful with this stock just because of the fact that I guess the organic revenue, the business just negative 37%. And they also lose, they don't lose too much money. Actually, yeah, they do. This was a record or almost record loss of a quarter, the second most they ever lost. They lost 25 mil this quarter. I'd just be really careful. I'd keep the allocation that one low. Are they headquartered in the US? Where are they headquartered? Yeah, they're headquartered in the US. Yeah, okay. I keep the allocation that one low. I know people talk about it that one a lot, but I don't know. SoundHound when you have time. Hey, Danelle, this is kind of another like smaller company. Actually, this is a audio replication subscription company. So basically you go to this website, you give them a bunch of your voice's data, and you type in some text and it'll say what you said in text in your voice. And it's supposed to not sound like AI, but it still does. NVIDIA used to own this company. NVIDIA just completely sold out of their stake. If you're a shareholder of this company, there's one metric you want to watch, and that's their subscription revenue, because this has been impressive. If we go to their subscription revenue, which is 80% of the business, look at these growth rates in the middle. Like, this was a record quarter. It's up 78% after it grew 3,700%. So basically, they're transitioning from a company doing no revenue, $300K a quarter, to now a company doing $34 million a quarter. And this is a subscription business, so maybe it'll be reoccurring. But I don't love the long-term outlook, I guess, around just the whole business. Like, as long as they can keep up this top line growth, I'm probably sure the momentum will stay, because look at this top line growth. It's great. It's up 60% year over year. They are losing a bit of money, like 40 to 50 mil a quarter. That is a bit. It's mainly a thesis on will this subscription revenue continue to climb higher, and how will like AI audio do or as a business? And I don't know. Interesting name there. I'd keep the allocation still to this one really low, $3.4 billion. But that subscription revenue growth is the metric you watch, because that's what moves earnings. Oh, Microsoft stock? Yeah, this, out of all the stocks you can buy right now, Microsoft has got to be like my top 3 best picks right now. I believe if you buy Microsoft stock right now at current prices, for the rest of time, you should just get S&P 500 type returns for every single year for the rest of time. So hopefully 8 to 10% of your money back every single year for the rest of time if you just buy basic, boring shares of Microsoft today. And let me show you my thesis behind that. So first off, they're extremely cheap, and they're even cheaper because they're down like 3% in the overnight market. But currently, before the 3% drop, they're trading at 23 times forward PE. Again, it's even cheaper. So they're only trading at 23 times next year's net income for the behemoth Microsoft that, every company in one way or another uses. They own 27% of ChatGPT. Like, it's incredible. But anyway, let's go look at their actual fundamentals. So again, a Mag 7 stock and only trading at 23 times next year's net income. They're a big software name. So another reason why the stock has fallen is because they are categorized as a software stock. Think of Office, OneDrive, Excel, all those kind of apps. That does over $120 billion of annual revenue for them. And they actually just rose their prices on Microsoft 365, like software applications for the first time in over a decade. Like, literally, it was effective a couple months ago. First price increase in over a decade. So we should see even more growth to this software business. And they're not just a software play. Another thing I love about them is they're a cloud play. They're the number 2 cloud service provider by market share. The number 1 market share is AWS. And then the second largest market share is Microsoft with their Azure cloud. That does also over $100 billion of annual revenue for them. They own so many stuff, like they own Xbox, they own Minecraft, like they fully own Minecraft. That was one of their best deals ever. Like, they bought it off Notch for like $1 billion. Now it's like just itself is worth like 80 billion or something. Like, it's crazy. But anyway, they just print net income. They actually sold a little bit of OpenAI stock. So their net income was slightly artificially higher than normal. So it really was only around like a 30 bill of net income, but it was still a great quarter. Every quarter, Microsoft makes 30 bill plus in net income a quarter. They literally, according to S&P Global, Moody's, and Fitch, have a better credit rating than the US government. So Microsoft is more likely, has a higher chance of paying off their debt than literally the US government does. And you get a dividend, a 0.9% dividend, safe payout ratio. They do hecka share buybacks. It's just so safe. And I really think the risk to reward is so good. I literally cannot see Microsoft getting much cheaper than a 23 forward PE. I would like eat a sock if Microsoft ever got to like a teen multiple, like a 19 forward PE. There would have to be some crazy like black swan event for something like that to happen for Microsoft. Ocean said, what about QXO? I think they just got with like their housing merger. It's a bit of a confusing stock. It's more volatile because of less volume. Yeah, that's actually true. So here's QXO stock. I don't really know how to analyze this company because they don't have their revenue yet, or like, let's see here. Like, look at this. Yeah, like they were like a blank check holding company. They bought like this roofing company. So the revenue, like in 2025 Q1, the revenue was 13 million. And then like the quarter after, it goes to 1.9 billion. And ever since, it's like 2 billion a quarter. So let's see. They lose money every quarter. QXO.com. So there's some sort of roofing residential roofing company or something like that. I don't know if they trade like a home builder or what. I want to pull up their website, but it's not going to load. Publicly traded distributor of roofing, waterproofing, and complementary building products in the U.S. Huh. So they kind of remind me of a Carlyle Group. That's my favorite roofing play. Ticker symbol CSL. And, if you have a leak in your roof that's like leaking water on your inventory and stuff, like you don't put that off. You fix your roof right that second. And that's why I specifically like the roofing repair industry, because like Carlyle Group right here, because it's actually like almost like recession proof, because even in a recession, like you're fixing that leak as soon as possible before it causes more damage. So yeah, I do own Carlyle. It's one of my biggest holdings. I love that stock. QXO might be a similar company too. They own like Henry. Pretty cool. What's this one? Plug Power? I think that's ticker symbol Plug. Oh, Meta. Yeah, we'll do that. That's another great Mag 7. Plug Power, unfortunately, this one I don't love, and I'll just show you the numbers for yourself. I'll show you the numbers for yourself, and then you can draw your own conclusion. So look in the top right. This whole company is worth $2.97 billion, or we'll say they're worth $3 billion. So this whole company is worth $3 billion. Here's the part. Here's the part that makes this stock unbuyable, in my opinion. Just this quarter, they lost $900 million. So pretty much they lost $1 billion, or 1/3 of the entire company just this quarter. And the quarter before, they lost 400 mil, 200 mil, 200 mil, 1.3 billion. So for just all of eternity, there's never been a quarter where this company's ever made any profit. This just isn't the kind of stock I'd want to own, where they literally lose 20% plus of their market cap a year while diluting you while the stock's at all-time lows. It's a very bad stock, in my opinion. And it's maybe fun to swing like that thing. Maybe you're swing trading it or something like that. I get that. But would I buy and hold the stock as like a long-term hold? Definitely not. It's let's check the short rate. I bet it's really high. There's like real bankruptcy risk here. Yeah, look at that. 25% of all the shares are being shorted. Stocks don't get a high short rate for a reason. It's usually because they're trash and there's bankruptcy risk. Hopefully, I didn't mean to be too bearish on that one. Faye said, if you look at Lyft, yeah, we can look at Lyft really quickly. So Lyft, this is like an Uber competitor, but to tell you the truth, I like Uber as a much better play. Like Uber is Lyft, but Uber does so many more things. Like Lyft specifically is like ride sharing. When Uber does like freight, they do delivery, like Uber Eats. I don't think Lyft has like a Lyft like food delivery business, but U.S. House Committee investigates Lyft and Uber over AI-driven surveillance pricing practices. Huh. Anyway, Uber denied it. But anyway, Lyft is just now getting net income positive. They are way more expensive than Uber. Actually, no, they're not. No, they're not. Actually, I can't believe it. Forgive me. They're actually cheaper than Uber. I did not know that. So if you look at this forward PE, they trade at 20 times forward PE. Uber trades at 21 times forward PE. Let's see those projections. Okay. So they had a slight, well, anyway, actually look at this quarter. This was odd. That might be why they gapped down on earnings. Yeah, earnings day, they had a massive red candlestick on earnings. Look at this. So analysts expected them to do 1.75 billion revenue. It looks like they only did 1.59. But they must have had some one-time adjustment. It says like here's how you can tell if this is a real number. So look, if you go to the net income, it says they made 2.76 billion. They didn't actually. Way to tell is you go to the operating profit. This is the before tax number. Now that is weird. It actually says they lost money this quarter. Like the core business actually lost 185. Let's dig into this. Let's see if there are any AI kind of recap here. There must have been some sort of something. So ride hailing operations showed strong growth with gross bookings increasing 20% year over year to $5.07 billion and active riders up 18%. EBITDA rose 37% year over year, marking the most profitable quarter on this basis, driven by operational efficiencies to fight revenue shortfalls. So check out this. Strategic initiatives include global expansion through acquisitions like FreeNow and launching new services such as Lyft Teen alongside a 1 billion share repurchase program. Interesting. So as long as they're right, they did miss on revenue, but as long as they're right about this forward PE of a 20, that is interesting because they're definitely, if you look at the current PE, it says they're trading at 1.9 times net income. Again, they're definitely not, this was a one-time adjustment to their net income / EPS. They didn't actually make 2.76 bill, so they didn't actually make $6 of EPS. But interesting forward PE there. Hopefully that was kind of helpful there. What is this one? Plasma said CIEN. Please see CTM. Actually, let me check CTM first. So, and then we'll do CIEN. No, it's all good. Meso, but yeah, hey, if you have a stock you can look at, give me the ticker symbol. I've never heard of Mesoblast or some of these stocks here. Uber, better diversified. Hey, we could actually look at Uber stock too. Uber just acquired this app called Spot Hero, and I use Spot Hero, so that was actually really cool. So here's Castellum. I've not heard of this one before. Yeah, you're right. It's a very small company. If you look in the top right, the whole company is only worth $85 million. So just beware. You don't want to trust a lot of your money in a company that's only worth, $85 million. Just be careful. But let's go see their financials. I'm curious to see. So delivery and product and service in the areas of information technology, electronic warfare. So anyway, let's check out the revenue. So this quarter they did 11.6 mil of revenue, and I don't believe it. They actually got profitable. They made money, and not like some one-time adjustment setting this up either. They really did make $400,000 for the first time ever in history. They made $400,000 of net income after paying taxes. Did that beat analyst expectations? Oh, that was that quarter. Okay, yeah, it did. Looks like they maybe just reported recent earnings. They expected 14 mil. They only did 12 million. I don't know if this is like updated. I guess they lost 1.4 mil of net income. So yeah, they have so that's Q3. And yeah, they just reported Q4 earnings. Must have been recently. But anyway, that's interesting because out of all the companies worth $85 million, I'd want to buy the company worth $85 million that potentially is making like $1 million a quarter. They're getting, I'd still keep allocation very low to that one. Look at this balance sheet. Look at that. The assets are growing, but notice the liabilities are shrinking. That is a great sign for the fundamentals. Google says their PE ratio is a 2. Yeah, for Lyft, we just saw that too. Yeah, it does say Lyft is trading at 2 times PE. But again, we just saw that the EPS had a one-time adjustment. They don't actually. That's why we always look at the non-adjusted numbers as well. Like Tesla does that all the time, bro. It's like Tesla, it says their net income is this number, but it's because they either sold Bitcoin or had a one-time tax write-off thing where the net income isn't actually that high and the EPS isn't that high. A lot of companies do that sometimes. It's just an accounting trick. That's why we look at the numbers that aren't with the accounting trick. So here's Ciena stock. Yeah, what's up, Plasma? CIEN. They're actually a huge company worth $41 billion. They're down 6.7%, or nah, dang, they're down 7% in the overnight market. Let's go see what this company does because the stock has done phenomenal. Is there any kind of earnings recap we get from this company? Ah, dang, no, we don't. That's okay. But look at the difference of the PE. So right now they traded 187 PE, which is like ridiculous. But when you look at the forward PE, it is significantly cheaper at only 60 times next year's net income. So they're in networking platforms. Look at the growth. They're finally back to growth. Look, they used to have negative growth. Now it's up 22% year over year. 71% of the revenue comes from the US. The analysts see the revenue continue to go higher. Revenue is going to go from 1.21 to 1.54. Look at the net income. So they're already net income positive. The net income is supposed to go from 50 mil to 150 mil. Sorry, there we go. Okay. But yeah, look at these net income projections. It's literally going to go from 50 mil to 165 million. So that must mean the forward PE. Yeah, that's why the forward PE is so much cheaper than the current PE. So that's why for companies experiencing an insane amount of growth, you never just look at the PE ratio. You do like a PEG or a forward PE or a 2 or 3 year out forward PE or something like that. So the future looks bright for this company, according to the analysts. They're just supposed to print like literally 165 mil in net income in 2 quarters. So now here's their current net income. Interesting. Let's go check out their website really quickly. So they're in communications equipment and 5G. So let's check out their website really quickly just to get a better idea. Connect with the best. So optical innovations enabling new AI architecture. Another industry first to meet data center demand. Efficient CPO solution. So anywho, some sort of, I guess, AI tailwind from this company with their communication equipment, something like that. Oil stocks are way solid, dividend payers and way up. Yeah, dividend stocks have been doing great. Yeah, if we look at oil in the overnight market, this is not good. It's now up 26. Oh my goodness. It was just at 109. It's at 114. That's not good. You know, I guess it's good if you own some oil and gas stocks. The only oil and gas stock I own is Murphy USA. The thesis here is like last time oil prices were high, the gas station said people don't fully fill up their tank. They only partially fill up the tank, leading them to come back to the gas station more and more. And so they sell more merchandise like in candy bars and stuff like that. But yeah, this year has been the year for like defensive stocks like a McDonald's, those kind of stocks right now. Google? Oh yeah, Google. Let's do Google. We'll look at like a 2 or 3 more, then I'll get out of here. Dang, we've been live for 2 hours and 20 minutes. Yo, if y'all wanted the follow button, we stream every Sunday this exact same time. I try and stream every day. We're definitely going to be streaming tomorrow. But yeah, look at Google right here. This is a phenomenal never sell. They're down 3% in the overnight market. So let's see if there's any news here. There's always news. Apple in talks with Google to host Gemini-powered Siri. So Gemini is going to power the new Siri, which is because Siri's terrible right now. CVS Health and Google Cloud partner. Yo, the Google Cloud is huge. So Alphabet unveils strategic vision targeting quantum computing, robotics, and AI drug discovery while CapEx is nearly doubling. See, that's the thing. Google is like an ETF in one. They're a quantum play, robotics play, AI play, and even a chip play. Because check this out. Meta signs a multi-billion-dollar deal to rent Google TPUs, expands hardware beyond just NVIDIA. So people are actually buying Google's TPUs because they're more efficient. Oh, wow. Google Play Store reduced commissions to 10 to 20%. Wow. No way. This news, I got to show someone this. We have been watching this lawsuit for many, many years from Epic Games versus Google Play and Apple. I find that fascinating. Okay, well, anyway, here's the thing with Google. They, again, ETF in one, big cloud play, AI play, cybersecurity play. They just acquired Wiz for $10 billion, which puts them in the top 10 cybersecurity plays. But look at the forward PE. And again, it's even 3% cheaper because they're down another 3%. But this is why Google is like not overvalued at all. They're only trading at 25 times forward PE. So only trading at 25 times next year's net income. And check out this Google Cloud growth. It is insane. This is the highest growth rate on the entire screen. It's up 47% year over year. After grew 30, after grew 25. So literally the growth rate is growing on the Google Cloud, and it's only supposed to get higher with with Meta or in AI, AWS is blowing up. They're getting so many deals from like Anthropic. They own Google owns so many stakes in a bunch of different companies. Google owns 7.5% of SpaceX, which is about an IPO this year at like a 1.5 trillion valuation. They already own 7.6% of it. They're up over 50x on their original investment. They have some of the best investments in history. Like they bought YouTube for 1.2 billion. Now it's worth just itself over 100 billion. But yeah, anyway, here's the net income right here. You can't make this up. Google is a money printer. Here's the net income, literally 20 to 30 or 25 to 35 billion of real net income a quarter. And the net income's, again, only supposed to go up because the forward PE is lower. But yeah, ETF and one, they own Android, Google Play Store. They own YouTube. They're in quantum chips, robotics, AI with Gemini. Like Gemini is taking over ChatGPT. Google Cloud, cybersecurity, advertising play, like a chip play, selling TPUs now. You get a dividend. They do massive share buyback, second largest share buyback program of any company to exist on Earth, right behind Apple. So, yeah, congrats if you own Google. I'm a Google shareholder. Full disclosure, I'll show you my Google position. They're a phenomenal never sell name. Like, don't ever trim or sell your Google position. So I'm up 77%. But yeah, dang, they're down 3.2% in the overnight market. That could potentially lead to a good buying opportunity. Again, they're not even crazy expensive at a 27 like forward PE. Let's see here. I can't buy more Verizon. Verizon's done good this past week. Verizon you buy to maximize your income. This month has been like its best month, like one of its best months ever. But if we zoom out to Verizon, even after this huge rally that they've had, Verizon stock is the same price as they were back in 1998. So you haven't had really much stock price appreciation, but what you do get is a very safe over 4% dividend. And again, I'm not just like dogging on Verizon. It's our main competitor too. AT&T as well. It's not just Verizon. AT&T as well is also the same prices they were back in 1997. They're another kind of higher dividend play. So you kind of buy those to maximize your income. Historically, you will not outperform the S&P 500 holding AT&T or Verizon, but you do get that nice dividend yield. Hey, what's up, Kate and Supermaster? How's it going? Google would pay out 85% more if YouTubers' ad blockers are made illegal. Really? If ad blockers are made illegal, that's crazy. Google is cracking down on ad blockers and stuff. BlackRock is limiting withdrawals. Yeah, that was a huge hit for private credit. So if we go to BlackRock right here, actually, I want to pull up the news for this one, but yeah, they have this private equity fund worth like $26 billion. And one guy tried to withdraw over 10% of all the assets. And now they're like no longer allowing people to withdraw. So yeah, look at this. BlackRock restricts withdrawals from $26 billion corporate fund after hitting quarterly caps. So that just sent a very bad message to the whole private lending market. Like the BDCs tanked like a blue owl. A Blackstone tanked, and BlackRock's down another 3.2% right now. And BlackRock is one of the stocks I'm actually a big fan of right now to buy the dip on. They're one of the more higher quality stocks to buy the dip on. Look at the forward multiple. It's only a 17, and they're down another 3%. But one cool thing is, besides that private equity business, one thing I really like around BlackRock is their alternatives revenue. This is their ETF business. So and specifically their alternatives ETFs right here. This is their IBIT, their crypto ETFs. So they're kind of like the picks and shovels play. If you buy the Bitcoin ETF, they just keep a fee on it every year. So look at the growth specifically. It's up 35%. Last quarter is up 120, 71. And on the full year, like record full year from 2024 was 1.76. Now it's over $3 billion for the full year 2025. And it's not just that business that's growing as well. They also have this technology subscription revenue reoccurring. It's up 25%. After grew 13, after grew 20. So they're just on a streak of growth for a lot of businesses. And you get a nice dividend. So it's like a dividend growth stock. You get a 2.2% dividend, safe payout ratio. Yeah, what do you think about BlackRock? A 17 forward PE doesn't seem too nuts to me. Ooh, is that Fabrinet? Let's look at Fabrinet. FN. Yeah, this is scary. Yeah, oil prices. BlackRock can go bankrupt? No. Market is hooked. Hey, what's up, Caden? Yeah. So here's Fabrinet. This is another like AI component beneficiary. And unfortunately, they're down 7.5% in the overnight market. Just absolute just crazy sell-off. I don't know who's selling right now, but since there's just low liquidity in the overnight market, things are usually over-exaggerated. They're at them open, they'll probably recover all these stocks. But yeah, I like how diversified the Fabrinet is. They're seeing a lot of tailwinds from many sectors. Like they're big in telecom, datacom, data center, interconnect. Let's see how that's growing. Up 42% year over year. So literally the revenue went from 71 mil to 140 mil. High performance computing, I bet that's also super growthy. Literally just quarter over quarter went from 15 mil to 85 million. Let's go see the total revenue down here. So this is what you want to see. If we zoom out, almost like every quarter, the revenue just hits a new record. So that is a very impressive, revenue growth rate. And not just the revenue that's growing, they're already profitable. Look at this record net income too. If we zoom out, there's never been a quarter in history where they've made more net income. They made 112 million net income. That's after tax. So let's see free cash flow. Free cash flow is a little choppy, but that's all right. You mainly focus on net income. Yeah, like this EPS, $3 of EPS. So what's the forward multiple? That's the big question here. Only a 34, so a good increase. So they're at a 46, but the forward PE is only a 34. So not crazy expensive, but they definitely deserve a high multiple. They have some very impressive growth rates. And again, the multiple is technically 7% cheaper. Let's see what's next. MELI, this is, hey, what's up, 6-star? Yeah, this is Mercado. Actually, recently, Amazon, there was some recent bad news. Oh, it's still here. Look at this. Amazon launches a 15-minute delivery service in Brazil. So if you didn't know, what does Meli do? They're the same thing as Amazon. They ship you e-commerce products to you. This is like it's like a pure international play of like Amazon almost. Because check this out. Where does this company's revenue come from? Well, 52% of the revenue comes from Brazil. That's why that's bad news. If you don't want Amazon as your competition, Amazon launches 15-minute delivery service and 52% of the revenue comes from Brazil. Mexico's 22%, Argentina. And they do commerce services, commerce product sales, financial services, and income. I love how growthy they are. Like this top line growth is so impressive. And this is in US dollars as well. Another company where like every quarter the revenue just hits a new record. This quarter the revenue was up, wait, that's not the most recent quarter. Oh my goodness, there we go. Revenue's up 44% year over year. Super impressive. And they're still making good net income, easily like $500 million of real after-tax net income a quarter. What's their net margin, actually? I know their margins are going down because the revenue, so usually around an 8% net margin. Good whoa, look at that free cash flow. Basically $5 billion of free cash flow just this quarter. That's pretty insane. Yeah, congrats if you on Meli. I don't think this Amazon news would scare me out of Meli, but it is something to kind of keep in mind. And they might even fall a little bit more just because the PE, like, honestly, this is like the cheapest forward PE they've ever had. I don't really, I couldn't see them getting like crazy much cheaper. Like I could not see them at like a 27 forward PE. A 26 would be extremely cheap. So potentially the bottom is hopefully close to here. I love the international, like the thesis is maybe since they're like the international markets will grow faster than the US, who knows? Can you check into Poet, please? POET, Poet Technologies. Sure. Let's see. So another small one, they're only worth 950 million. So just be careful that market cap is just so tiny. I don't usually mess with companies under $1 billion in market cap, but let's go judge them. So non-reoccurring engineering services and product sales. So it looks like they don't have much revenue. Or yeah, look at that. The most recent quarter, they did 290,000 of revenue and they lost 7 million in net income on that. So that's the tough part. So first off, all the revenue comes from Asia. Are they headquartered there? No, they're actually, they have 94 employees. They're headquartered in Canada. So they're headquartered in Canada, but the revenue comes from Asia. I'd just be careful because just the revenue is so tiny. You're basically buying the company as they're going from a company that does no revenue to potentially doing I don't know, what are analysts expecting? I guess analysts are expecting 500,000 next quarter. I'd just be careful. But again, that's why the market cap is so tiny. That's why they're only worth 900 mil because the revenue is so tiny. But yeah, nothing's really blowing me away there. Just be careful. Hey, Rockman said, I'm not a fan of Poet. Just look at their website. It looks like a scam. Hey, actually, didn't we had their website pulled up for a second there. Here, let's view it one more time just for the fun of it. So I'm about to end the stream here. Poet powers AI. So trusted by Celestial AI. Yeah, a lot of marketing on their website. But yeah, let's see. View our products. Let's view their products. So something like this, these things, circuit boards, or I don't know. They just don't have much sales. I'd be real careful with that one. Oh, they fixed it. It was 1,000% worse. Oh, well, hey, good thing they updated it. I don't want to know what it used to look like last time if that's the case. All right, we can do. Ooh, should we do that popular one? Let's just do Apple. Okay, yeah, okay. That'll probably be the last one we look at. Yo, we've been live for 2 hours and 30 minutes. Yo, if you want to hit the follow button, make sure you are. Feel free to. I sell nothing. I have no course book. What's hap? Just on here, give my opinion. I try and stream every single day. I stream every Sunday the same time. And yeah, let's look at this last stock, and then it'll give you a stock portfolio update. We'll look at oil a little bit and what my most recent purchase was. So here's Apple stock. They're kind of being rewarded for not spending so much on AI. Oh, and they're just raising their prices because of the memory shortage. Has anyone heard of Micron right now in the crazy memory shortage that's happening? Well, that's actually allowing, it gives Apple the perfect excuse to raise prices. So I want to show you this right here. Yeah, look at this, kind of the neutral line right here in the very middle. Apple raises MacBook prices by $100 to $400 amid the global memory chip shortage. And they say this as neutral news. I think it's actually really bullish news. I thought so. Anyway, Apple's at a 30 forward PE. They're one of the more expensive Mag 7, like Microsoft's at a 22, Google's at a 24, Meta's at a 21. Like, that's why we're not in a bubble. Like, valuations are cheap. Apple's just a little bit pricey. But yeah, they make their own smartphone chip, and their smartphone market share is an 18%, and their smartphone chip market share is also an 18%. Guess that makes sense. But yeah, 60% of the revenue is their iPhone sales, and they just had a really good iPhone sales quarter. I guess with the new AI selling point around the new iPhone, the iPhone revenue is $85 billion. Is that the highest ever? That's the highest ever in all of history. They've never sold more iPhones in a quarter before today. The highest other quarter was, I'm seeing 71 billion. So the other highest quarter before today was 71 billion, but they did 85 bill this quarter. And another very valuable part of Apple is actually their services business. So whenever you go spend $100 in the App Store or spend any amount of money in the App Store, Apple keeps 30% of it. And they call it a developer fee, and it's literally all high margin royalty. So look at this annual services revenue. As more Apple devices are connected, they just collect more and more. Like, this is the iCloud revenue as well. It does over 109 billion of annual revenue for them. Yeah, then they have the wearables like the watch, the iPad revenue, the Mac sales, and they are a little bit affected by tariffs, because if you look at this, or this is why they were affected by tariffs, they got huge exemptions because they like agreed to invest so much in the US. But yeah, 36% of the revenue comes from the US. For some reason, I always thought it was like 50% or more comes from the US. But yeah, Europe's big. 26% of the revenue comes from Europe. China's 15%, and all these other countries, and they have actually the best buyback program of any company on earth to exist. Check this out. This is their after-tax number. After tax, they made 42 billion. Here's the before-tax number. Before tax was 50. After tax was 42. So they really did net 42 billion in net income. I think that was a record net income. Yeah, record net income on Apple, 42 billion in net income. What is Apple doing with 42 billion net income? Well, first off, they pay a dividend, and that dividend only cost 3.9 billion. That's why Apple's going to be a dividend growth stock, because the dividend costs so little, there's going to be a lot of room for them to raise it. And since they have so much leftover money, the best part about Apple and the real winner is the share buybacks. They have the largest share buyback program for any company in to exist. On average, they buy back $100 billion of their stock a year. And it's not just like they're doing it this year. For all of eternity, like we can scroll back like 2018, these 4 quarters back here, they were buying like 10 to 20 bill. Even in 2020, they were buying back 20 billion of their stock a quarter. And it's so accretive to right now's EPS. So I really like that. Like, instead, they could be paying out $20 billion in dividends a quarter, but I like that they're doing share buybacks instead, because that forces the stock to go up, gives you more ownership in the company, makes the EPS go up more, makes the dividend cost less. It just makes the stock go up. So Apple's a behemoth. Yeah, 51 billion of free cash flow for Apple this quarter. It's just so good. Again, 30 forward PE is a little expensive, but it doesn't get more quality than this. A lot of people are locked in the Apple ecosystem. They like wear the AirPods and the iPhone, and they just like it. Why don't you own Apple? I kind of just own all the other Mag 7. 1 billion people are addicted to phones. Yeah. That was Warren Buffett's thesis. He says most people, I'm going to butcher it now, but he says more people would like rather have a phone than like a car. It's so essential to like have a phone, and like people want the best phone. They're like, if I'm gonna have a phone anyway, I'm gonna make it the best phone. So I forgot Buffett's whole exact thesis on this, but it's like more like phones are so important to people, or it's like an addiction, which could be a good business model. But yeah, check this out. Again, Apple raises MacBook prices by $100 to $400 because of the memory shortage. Pretty interesting. I don't get why they're doing better. Apple relative to all the other stocks, like if you look at Meta, Microsoft, like Microsoft is well off all-time highs. Apple's actually been a little bit more resilient because they're not spending so much on CapEx. It didn't guide for so much. So yeah, let me end this with a quick portfolio update. So here's my buy and never sell portfolio. So every stock in here pays a dividend, or actually every stock in here does pay a dividend except for Amazon. They're the only one that doesn't pay a dividend. But yeah, if you look in the top right, we're down 4.13% on the day already. Even in the overnight market, we're already down $1,500 in there. But how are we doing year to date? We still should be doing decent. Yeah, okay. Oh, well, this hasn't loaded in today. So we're like up 21% year to date. When you include the other 4% down. And then we have our Robinhood portfolio. This is known as our dividend-only portfolio. We're already down 2%. Year to date, we're down 3.45%. And yeah, here's today's movers. Yikes, Google's down 3, Meta's down 3. Yeah, S&P 500's down 2.2, Qs are down 2.5. Like, there's no green. I bet oil stocks are green. Actually, let me go check oil stocks real quick. Yeah, look at ExxonMobil's up 4, Chevron's up 3.5, Raytheon's up 2, which is like an aerospace and defense play. Yeah, here's my Webull portfolio as well. I love being fully transparent. We haven't been doing too well. We're only up 4.8% all time. We're down 2.7% on the day. The only stock that's green is our chicken egg commodity stock. But yeah, AMD's down bad. Apple Oven's down 6. But it'll be an interesting week because next week we're going to be streaming tomorrow. We're going to be looking for some good stocks to buy next week. So yeah. Do you plan to buy into Apple one day? If I can find it at the right price, I might. Far from the best phone. I got a Chinese phone. RAM processor for $600. Oh, in terms of like specs, yeah, you can get a better phone for cheaper, but it's like the luxury experience around, like, it's like you can make your own coffee at home, but like people want to get the Starbucks cup because it's like a show off. Or I think you kind of get the point there. But yeah, I totally get you. Yeah, you can get a cheaper like Chinese phone. Actually, we actually we can. Here's what's crazy about Apple. We don't allow people in the US to buy. Well, you can buy Chinese phones, but like US people, like we tariff Chinese phones because we just consider Chinese phones spyware. But guess what? In China, since Apple's security is so strong, not even Apple has access to the back door of your data. In China, they allow Apple iPhones because they're so secure. Anyway, I got to go. See you guys very soon tomorrow. Hope you guys have a great rest of your Sunday. Good luck out there. I know the market's going to be rough next week. And thanks again to everyone on the YouTube replay. Hey, if you haven't already, it would still help me out if you do hit the like button on the YouTube stream. I would really much appreciate that. And go check out my most recent YouTube video. If you want to see interest on an aerospace and defense stock, I just bought the absolute dip on Moog.A. This is an aerospace and defense play, huge in missile contracts. They're a huge, they sell data center cooling pumps. Every single space mission in history uses their satellite components, like the Voyager spacecraft. A lot of the satellites we send is they send hardware into space every single week. Anyway, check out my most recent YouTube video, and I made a YouTube post about it if you want. See you later, Danelle, Rock, K. Hope